All right, guys, I'm back. I had a little issue with my internet connection in my setup. I'm back. Everything should be running smoothly. No more lagging. Also, the latency is a lot less. So before I was streaming with like about a 20-30 minute delay. This should be a lot smoother. So let's give this a try. I've been trying to do my live stream all morning. This is the first time I try this, and I've been messing around with the settings. So let me know if you guys like the stream. Let me know if you guys are getting any lag at any point. I'm trying to give the most up-to-date CCIV news and updates and information. So I appreciate your guys' patience. I know I've been streaming. This is the third time I've been streaming today. I deleted the previous streams, but now everything seems to be running smoothly. Okay, guys. So let's see what we get now.
Mortgage rates higher. And she's got a CNBC News update. Rahel, good to see you.
Hi, Becky. Good to see you as well. And here's what's happening at this hour, everyone. Senators Mitt Romney and Susan Collins announcing that they, too, will oppose President Biden's choice to head the White House Office of Management and Budget here at Tandon. Collins says that Tandon has neither the experience nor the temperament for the position. Merrick Garland is prioritizing policing and civil rights during his confirmation hearing to lead the Justice Department. He says that the agency must be politically independent.
If I am confirmed as Attorney General, it will be the culmination of a career I have dedicated to ensuring that the laws of our country are fairly and faithfully enforced and the rights of all Americans are protected.
And watch the news with Shepard Smith to see why Garland says that America does not yet have equal justice. Becky, I'll send it back to you, but also some emotional moments during that hearing, as Carl Quintanilla pointed out on Twitter.
Yeah, I know. I've been watching and kind of keeping an eye, and we'll definitely tune into Shep tonight to hear more. Thanks, Rahel. Good to see you. Up next, a bearish sign for Bitcoin. Kohl's is in the crosshairs, and Instacart prepares to take on the grocery stores. All that and much more coming up in today's edition of Rapid Fire. The Exchange will be right back.
Turn on my TV and boom, it's got all my favorite shows right there. I wish my trading platform worked like that.
Well, have you tried Thinkorswim? This is totally customizable, so you focus only on what you want.
Okay, it's got screeners and watch lists.
You can even see how your predictions might affect the value of the stocks you're interested in.
Now, this is what I'm talking about.
Yeah, it'll free up more time for your true crime shows.
British baking competitions.
Didn't beg you for a crumpet guy.
Focus on what matters to you with Thinkorswim.
At Southern New Hampshire University, we're committed to making college more accessible by making it more affordable. That's why we're keeping our tuition the same through the year 2021.
I knew SNHU was the place for me when I saw how affordable it was. I ran to my husband with my computer and I said, look, we can do this.
Take advantage of some of the lowest online tuition rates in the nation. Find your degree at snhu.edu.
Get some coin, save some coin. Osprey Bitcoin Trust is the lowest cost tradable Bitcoin product. Hold it in your brokerage account or your IRA, which saves even a little more coin.
December 2015, I had a robotic radical prostatectomy. Came home from the hospital with a diaper and knew that wasn't an option for me.
1 in 6 men experienced urinary incontinence, and my husband, unfortunately, was one of them.
We're Men's Liberty, and we can help. Our revolutionary solution to men's incontinence is backed by the more than 5 million units that have been used with zero adverse side effects.
I want to be confident that the product that I'm wearing serves its purpose, and the Men's Liberty does that.
I told my husband to give Men's Liberty a try to regain his independence and confidence, and you should too.
If you're tired of completely useless solutions, the results you get with Men's Liberty will change your life. We promise that 24/7 dryness and comfort are commitments you can count on. Your 100% satisfaction is our mission. Men's Liberty is made in America and covered by your insurance. Call now and receive a free week's supply with your first order using this code. Take this important step towards finally enjoying the freedom you deserve. Call us today.
Total market coverage in your hands. Now on the CNBC app. Up-to-the-minute updates, breaking news alerts, everything you want to know when you need it. Stay connected, stay informed with the CNBC app.
All right, welcome back, everybody. Let's get you caught up on a few stories that should be on your radar today. It is time for Rapid Fire. Joining us with their takes are Kate Rooney, Deirdre Bosa, and Courtney Reagan. So, ladies, let's kick this off. First up, Bitcoin is moving lower less than a day after hitting an all-time high of more than $58,000. At this morning's lows, it had been down as much as 17%, briefly breaking below $50,000. At the same time, some new data from Chain Analysis suggests that as Bitcoin grew more popular with Main Street investors, some of the biggest holders, meaning those with more than $50 million worth of Bitcoin in their accounts, were actually trimming their positions. Kate, you've been following this story pretty closely. What's your takeaway as we watch this break out?
It's so interesting that bigger group of investors that you mentioned, those holding more than $50 million worth, have really been cited as what's been driving Bitcoin past the $50,000 level. That data from Chain Analysis shows that when it hit that benchmark 50,000 level, they started trimming back their holdings. So whether they're more cautious, just wanted to take some profits, that group in particular scaled back. Meanwhile, retail investors, who we think of as sort of the 2017, 2018 cohort of Bitcoin investors.
All right, so now we're seeing CCIV going below $60. Earlier on the stream, I was talking about being stuck between the $58 and $60 levels. We ran up to $62. We had some support at the $62. We had some resistance at the $62 mark. It got rejected. Now we're going back down below 60. So if it doesn't break 60 here, we can see it go back down to this range between 60 and 58. Afterwards, we see if we go to the depth market here, we have resistance at 62 level and 63 levels. And let's see what else we have here. 64, basically every dollar. We have a resistance at every dollar. So we'll see what CCIV does going forward.
Have sort of difficult to put into context because an analyst at JP Morgan said the value of Bitcoin can be anywhere between $11,000, the cost to mine it, or what, $146,000, which would give it the market cap of gold. So it really just depends on what those institutional investors and retail investors want it to be worth, how much value they place into it. It was so interesting, Becky, hearing Ken Griffin on Squawk Box last Friday saying that he really doesn't think about cryptocurrency. And comments like that, to me, seem kind of crazy, because whether you believe it's Bitcoin or the technology behind it, whether that be blockchain or a central bank issued digital currency, feels like that's where the momentum is and where we have to separate sort of the up and down daily price of Bitcoin and focus on its long-term value.
Yeah, Court, we have seen places like Tesla saying that they'll start accepting it at one point, maybe accepting it for the price of their cars. You've seen places like Miami saying that maybe if you want to get paid as an employee of the city, you could eventually get paid in Bitcoin. But really, if you're looking at the broad group of retailers that you focus on, they're not looking at that just yet.
That's such a good point, Becky. I was thinking about this a couple of weeks ago when we started to see this run up happening again, and I thought, is Bitcoin really going to take off if you can't truly use it every day, or take off as a currency, I should say, because there's an argument about what it is, right? A commodity, is it a currency, a separate kind of asset class altogether? But unless you can use it at the grocery store or at the drugstore, there's just going to be a certain group of people that are no longer interested in this. And I think that that was a really good point you were making previously.
Earlier, we had this article from Bloomberg. Bloomberg updated their terminal, and they basically just saying that we're nearing a merger deal. No new information was released. This was from today, February 22nd at 11:19. I believe this is Eastern time. I'm in the East Coast, so I'm actually Pacific time. So this is the latest news on CCIV, just Bloomberg terminal once again, going over, updating the terminal with more news, more information. This is very similar to what the type of news they released on Saturday. So again, I guess just creating more hype again. Let's see. I also have another article. Let's take a look here. This was another article that was released. This was not from today. This was from Saturday, the initial one. But you can see here in bold letters, Lucid transaction could be announced on Tuesday. So very bold there, just sticking out from the list among other news. And yeah, Bloomberg continues to hype up the merger, and we can see a merger possibly today, possibly tomorrow. I think personally, they're not going to make it that easy. We might see a disappointment tomorrow and a sell-off, and then we're going to see a buy the dip opportunity, and then we're going to see a merger towards the end of the week with a massive rally. I could be wrong. The merger can happen tomorrow, and we see the rally as soon as tomorrow. If and when the merger is confirmed, I think we easily go over $70 in the blink of an eye. I mean, there's going to be massive opportunities. So yeah.
With Deirdre, when we expensive proposition, and I hope it tasted good going down. Anyway, topic number 2. A group of activist investors with about a 10% stake in Kohl's are nominating 9 directors to the company's 12-person board in an effort to try and drive the stock price higher through a sale-leaseback program. Kohl's shares are, in fact, moving higher today. In fact, when I looked at it earlier, it was up by about 10%. It's right now up by just over 8%. Here's what one of the activist investors had to say on the halftime report in the last hour.
It's really about their inability to execute the initiatives that they set for themselves. It's also about the lack of expertise in the boardroom. You know, you talked about 9 might be a lot of directors. They don't have one single retail CEO on their board. It's really amazing to think that a company would be able to succeed with that kind of board with no retail expertise in the boardroom.
Kohl's issued a strong statement shortly ahead of that interview saying, quote, "We reject the investor group's attempt to seize control of our board and disrupt our momentum, especially considering that we are well underway in implementing a strong growth strategy and accelerating our performance. And we have refreshed half of our board with 6 new independent directors since 2016. Courtney, you're the expert here. What do you think?
You know, I think this is a very interesting target, especially for this group of activist investors. They've gone after retailers before, but retailers that were considerably smaller and those that were in much more of a clear decline than Kohl's. I understand some of their points that if you look over the decade, the stock performance has really not gone anywhere. But since October 2020, when they laid out their latest strategy, the stock price has run up about 150% or so. And when they're talking about nominating new directors to the board, really an entire slate with 9 people, that is an interesting thought. And of course, that would really be turning the guts of that board inside out. I know Jonathan Duskin's comment about not having a single retail CEO on the board kind of made me look into other retailers, and actually Walmart doesn't.
Okay, I just saw this article from Bloomberg being listed, it looks like, in the Mexican exchange. So this is Lucid is really, really being prepared to be something that is globally unexpected. And it's already being traded in the Berlin Stock Exchange. So that gives access to Europeans investing in CCIV. And they're just really doing a fantastic job. Churchill Capital and Lucid Motors are really doing a great job hyping this merger up, creating a flood of attention and investors to really raise a lot of money. And this is really fantastic. This is really great. I think they're doing a great job. We're going to see Lucid Motors immediately. I've never seen anything like this where a SPAC is being traded in multiple exchanges before a merger. I mean, this is ridiculous. This is why I have about 50 to 60% of my account invested in this SPAC. I mean, some people think this is lunacy. Some people think this is stupid. I mean, we're living right now in some really, really weird times, and there's a lot of money being flown around. You have people with stimulus. You have a lot of people getting money from PPE loans. You have a lot of businesses with money. You have big corporations with money. You have a lot of institutions buying into this. I mean, even if Lucid Motors is a slight failure, there's just way too much money behind them right now. And I think everybody wants this to be the next Tesla, because everybody who missed the Tesla opportunity now has a second chance to make that kind of return. So I think Lucid can even perform sloppy. Lucid cars can even not perform as well as they expect it to perform. They can have a lot of problems, but there is so much expectation and money behind it. I think that the people just are going to continue to buy into it because it's the next 10, 20x opportunity. It's the next Tesla. I mean, this is like buying Tesla at $20. I mean, this is a huge opportunity. So yeah, I just saw this. This is a new article being listed. You can see that CCIV is just going guns blazing. They're being listed. Right here it says Berlin, Tradegate, and then now we're looking at Mexico. Let's see, listed in New York, obviously, and then we're looking at Berlin, and then we're looking at Mexico. So they're going to continue to pile on this SPAC, not even Lucid Motors, this CCIV SPAC in different exchanges. I mean, this is ridiculous. This is crazy, guys. I mean, seriously, if you don't buy any shares, I mean, I don't know what you guys are doing.
How the board or former CEO.
Easy wins then if the stock actually does pay off after that. Anyway, let's switch topics. Finally, we want to get to Instacart. It's reportedly exploring the use of robotic warehouses, according to the Financial Times. The company has reportedly been researching ways to automate the grocery picking process for almost a year now, and initially wanted to open as many as 50 warehouses in the United States in about a year. However, Instacart has only previously denied claims that it may one day attempt to create its own grocery store. All of this comes as the delivery company is headed for an IPO in the next few months. So should grocers be worried? And we'll start things off with you, Dee.
Well, yes, grocers should be very worried because over the last few years, and especially over the pandemic, they have just handed over extremely valuable information about their shoppers, what they like to buy, kind of even just what they like to order, even advertising information to Instacart. So if Instacart were to go and create its own brand of grocers, that could be very dangerous to its existing partners. However, Becky, and you mentioned this, that Instacart has repeatedly denied. I mean, its CEO, Rsva Mehta, told us, just over a month ago that he told us in no uncertain.
Okay, we're seeing a little sell-off now. We're going to start seeing some buyers come in here if we see the depth of market. So we're going back down to $58. Nothing to panic. I mean, we're going down. They held the $60. There was some resistance at $60. So now we're going back down to its normal range between $60 to $58. As you can see, as it goes down, we're going to see a flood of buyers coming in and try to hold these price points. We have resistance at 58. 58.05, 58.80, and yeah, this is pretty normal activity. This possibly can be a short-term trade right now. You can buy the dip. I would wait to go a little bit lower, but yeah, nothing to be scared. This is just normal activity.
Terms, they will not compete with their partners. Does that mean they never will? I mean, we're not sure. In the meantime,
so many years in the United States before the pandemic, online grocery was such a tiny percent of the total grocery market for a number of reasons. It's really expensive to execute for the grocer itself. They have to have the refrigerated trucks. They have to line up the delivery times when you can be there to accept it. And a lot of customers don't want to pay for it or hadn't traditionally wanted to pay for it before the pandemic. And I had asked a number of times before many different food grocers, why don't you just buy Instacart? And they sort of said, we don't want to buy them. It's an expensive proposition. It's better if they do it. We're not going to make a profit doing this.
Right. Hey, Kate, I want to give you the last quick word. We're about out of time, but you get last word.
You wonder what that does to existing relationships. This is an imperfect comparison, but if you think about Amazon trying to partner with retailers, they might say, wait a minute, you've got your own grocery stores. That might leave some room for another third party, a Shopify, for example, of the grocery market to come in and maybe make some room for some other competitors.
Kate, Deirdre, Courtney, great to see all of you guys. It's been really nice. We'll do this girl chat again sometime soon, okay?
Perfect. Love it. Thanks, Becky.
Bye, guys. When we come back, mortgage rates are on the rise after sitting at record lows for months, poised to make already pricing homes even pricier. We're going to get a housing health check ahead of the all-important spring season. That's coming up next. We'll be right back.
All right, guys, at this point, if we see CCIV go down to about $58, I'm going to buy the dip. I'm going to buy some options, and I'm going to buy the dip for a day trade, possibly, maybe a swing trade. So I'm really liking it at these levels. If it doesn't come down, I'll just continue to stare at it and not trade it. I already own the shares. It's fine. But I'm definitely looking to buy an opportunity here with some options. I will be buying the options here live if I do see that price action go down to $58. Yes, so that's kind of where I'm standing right now.
My strongest ally and my closest asset. The gold standard, so to speak. People call my future uncertain. There's one thing I am sure of.
Ten years ago, we founded Loan Depot because we were confident we could deliver the American dream of home ownership to individuals and families across the nation. At Loan Depot, we know home means everything.
Hey, our workers' comp insurance is expiring. Should I just renew it?
Yeah, sure. Hey there, small business owner. Pi Insurance here with some sweet advice to stop you from overpaying on workers' comp. Try Pi instead and save up to 30%.
30%? Really?
Sure. Get a quote in 3 minutes at easyaspie.com.
That is easy.
So, need another reminder?
No, I'm good. Reminder for what?
Oh, yeah. Need workers' comp insurance? Get a quote in 3 minutes at easyaspie.com.
Grubhub Perks give you deals on all the food that makes your boogie. Get the food you love with perks from Grub What You Love.
Welcome back. We've got a heads up for potential home buyers. Rates are on the rise, and it looks like they could be staying that way for the important spring season. Diana Olick joins us right now with that story. And Diana, that's the big question. Is there sticking power behind these gains?
Yeah, they're definitely in that upward trajectory now, Becky. Mortgage rates rose more last week than during any other week in nearly a year, and it's all thanks to that recent spike in the 10-year Treasury yield, which rates loosely follow. So after hitting a low of 2.75% at the end of January, the average rate on the 30-year fix just hit 3.06% this morning. That's according to Mortgage News Daily. So let's say you wanted to take out a $300,000 mortgage at the end of January, but you waited until today. Well, you're now looking at over $50 more in your monthly payment. And that may not sound like a lot, but the bigger the mortgage, the bigger the difference. And home prices are accelerating at the fastest pace in several years. Prices were up over 9% in December year over year, according to CoreLogic. Compare that to just 4% annual price gains 2 years ago. And prices have been juiced not just by high demand and low supply, but also by these record low mortgage rates. The lower the rate, the more home you can afford. So for the spring market, affordability will likely weaken even further. Sales could take a hit, and prices, Becky, will likely follow on the downside.
Diana, thanks. Good to see you. Rising mortgage rates can introduce a host of issues into the red-hot housing market, but our next guest argues that there is a slim silver lining in this rate environment. It could help cool off an overheated market. Let's bring in Andy Walden, the director of market research for Black Knight. And Andy, good luck with this one. It's like you're going to try and sell people on broken glass. Explain to me why higher mortgage rates are actually a good thing.
That's right. And it sounds counterintuitive, but for all of the reasons that Diana just mentioned, the housing market is extremely hot right now. We've been coming off an environment where 750,000 homeowners chose not to sell their home last year because of the pandemic, which has caused a drastic fall in the number of homes for sale out there. We're down 40 to 50% from where we were at the same time last year. At the same time, we've been having these record low mortgage rates, and so it's created this environment where it's extremely difficult for homeowners to buy a home, and it's caused these very drastic rises in home prices. As Diana mentioned, and according to some of our collateral analytics numbers, home prices have been up. The median sale price has been up 15% year over year in each of the last 3 months. So introducing this higher interest rate environment, while it does impact homeowners in the amount that they would pay for their home, does reduce some of that bidding war risk and could cool down the housing market, at least to some degree.
I'm still trying to get my head around it. It's good news. Fewer people are going to want your home. Look, what it does is it eats into the price that either you're going to get as the seller, or it increases the price that you're going to have to pay as the buyer, and that's not that's not good news. It means more of that money is not going to the people actually involved in the transaction directly.
Well, when you look at what's going on out there in the housing market right now, you have a lot of homeowners or potential home buyers that simply can't buy a home that want to right now because of some of the bidding war activity. And what you like to see when interest rates are low is homeowners putting that money back in their pocket. That's not what tends to happen. What you tend to do is pay more money for the exact same home. So when you look at the long-term health of the housing market, I think reducing the rate at which home prices are going up, right, that 15% home price growth simply is not sustainable. So pulling that down to a more normal level, reducing the bidding war activity, even though you're maybe increasing your monthly payment a little bit, you're reducing the number of bids that you're competing against in the market, which could be a benefit to you.
You're still not selling me on the broken glass.
Okay, now we're seeing CCIV going down to 58. We're at 58.50, 58.80, 58.70. We're at 58.78. So in a few more, around 58, I have the options chain open here, and I'm looking at buying the 50 strikes here. I'll probably just buy one, just in case I don't want to get ran over. I'll buy one here at this level. So I have the options ready, and we're going down. We see some support at the 58 mark. And let's see how it goes.
Cooling effect on the buying power that homeowners have out there in the market right now.
Andy, thank you. You're a good sport. It's good to see you.
Absolutely. Thanks.
Thanks. All right, let's get over to Julia Borston. She's got more on Spotify's big announcements today. Julia, what can you tell us?
Well, Becky, Spotify shares are up about 4.5% after the company announced expansions of many different parts of its business this morning. Now, Spotify's app will roll out to 85 new markets to reach an additional 1 billion people. The company announced a range of new podcast deals, including one with President Obama and Bruce Springsteen, as well as new scripted shows, including some from DC Comics. Spotify is also expanding its ad network to be more like Facebook's, with self-serve access and the ability to target Spotify users off the platform. Spotify is also launching a new hi-fi subscription option for which it'll be able to charge more. Becky?
Julia, thanks. Great to see you. That stock up by about 4.5%. Still ahead, creativity is necessary to make art, but now the art world is getting creative when it comes to financing solutions. We've got that story and whether buyers should beware next.
Shield-level annuities from Bright House Financial can help provide your portfolio with a level of protection from market volatility and opportunities for growth, so you can feel some protection even when the market is uncertain. Bright House Financial, build for what's ahead.
The highest level of performance requires agility, speed, and skill.
This is the A-game. Welcome.
Where intuition is inherent, where systems learn to become intelligent. Automation is effortless, and technology and people are one in an enterprise.
I know the A-game, and the A-game is business at its best.
We call this the Autonomous Digital Enterprise from BMC.
Stop hodling high fees. Osprey Bitcoin Trust is the lowest cost tradable Bitcoin product. Hold it in your brokerage account or your IRA. No wallet, no keys.
It's either the assurance of a 165-point certification process, or it isn't. It's either testing an array of advanced safety systems, or it isn't. It's either the peace of mind of a standard unlimited mileage warranty, or it isn't. For those who never settle, it's either Mercedes-Benz Certified Pre-Owned, or it isn't. The Mercedes-Benz Certified Pre-Owned sales event now through March 1st. Shop online or drop by your local dealer today.
Sex! Now that I have your attention. Boing! Wow!
For real skis?
For real skis.
I'm psyched.
Stream your favorite comedies now at peacocktv.com.
This is a crate from KiwiCo. Each crate has an awesome science, art, or engineering project inside. Parents can order online and it ships right to your door. Learning has never been so fun or convenient. Get 30% off. Visit trykiwico.com.
Me gustaría
Me gustaría pedir algo de comer.
Ah, ok, por supuesto que puedo.
How do you learn Spanish?
I learned with Babbel.
So, Bubble, it's kind of like if my teacher is in your phone?
Kind of. And the best part is help me make new friends, like you.
Language for life. Go to Babbel.com and try it for free.
Hey, I'm Nick. We created Gabby because most people overpay for car insurance. Gabby is a free tool that saves you money by finding the best deal. Gabby saves users over $800 a year on average. Go to Gabby.com and stop overpaying for car insurance.
Welcome back, everybody. From art to sneakers and handbags, lenders are coming up with creative collateral for wealthy people to use to raise cash. Robert Frank joins us right now with that story. And Robert, it's good to see you.
Good to see you, Becky. Now, loans against art have soared to over $20 billion, with collectors pulling records amounts of cash.
All right, we have some new news here. Just this out right now, Churchill Capital 4 spikes 19% as report tells investors to expect Lucid Motor deal as soon as Tuesday. Okay, nothing new. All right, Markets Insider just released this. This was today at 3:57 p.m., which is what is this? Eastern time? This is not correct. It's probably a typo. I'm not sure what time zone this is. Okay. A merger of Churchill Capital 4 and Lucid Motors could come as soon as Tuesday. Bloomberg report. Okay, I already know that. Okay, soared more than 425% since the merger rumored first reported. We already know this. Shares spiked, blah, blah, blah. Okay, I don't think there's anything new here. There have been rumors about a merger of Churchill Capital 4, a special purpose acquisition company, Lucid, for over a month. A deal could use $2 billion in cash raised, blah, blah, blah. Let's see, skyrocket more than 400. Okay, whatever. Investors are excited. Yes, we are, because we're making that money, baby. Let's see, Tesla, and then Saudi Arabia's sovereign wealth fund. We already know this. Made plenty of videos of that. In December, Lucid completed its first factory in Casa Grande, Arizona. Okay, we know they have a factory. The merger goes through. It would continue a year of monumental growth for SPACs. Now it's talking about SPACs. Alrighty. All right, a whole bunch of nothing, guys, but it's a new article. This is just released now at 3:57 p.m. at some time zone somewhere. I don't know where Markets Insider is based out of, but maybe that's a typo. All right, that's something new here.
Cash.
It's every municipal bond investor's dream. A bright, shining city on a hill where there won't be any financial problems. But what if there are? That's why Assured Guarantee protects your principal and interest payments. Assured Guarantee, a stronger bond.
They're first. First to respond. First to put others' lives before their own. And in an emergency, they need a network that puts them first. That connects them to technology, to each other, and to other agencies. That's why AT&T built FirstNet with and for first responders. The Emergency Response Network authorized by Congress. FirstNet, because putting them first is our job.
These days, we want sophisticated but simple. Cutting edge, made user-friendly. In other words, we want a hybrid. And so do retailers, which is why they're going hybrid with IBM. A hybrid cloud approach with Watson AI helps manage supply chains while predicting demands with ease. From retail to healthcare, businesses are going with a smarter hybrid cloud, using the tools, platform, and expertise of IBM.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Your grooming business is booming. You need to hire.
I need Indeed.
Indeed you do. The moment you sponsor a job on Indeed, you get a short list of quality candidates from our resume database. Claim your $75 credit when you...
They break your heart.
He claimed to transport animals in need.
To snare your cash.
Where's the body?
Social media scams. All new American Greed. Tonight, 10 Eastern. Set your DVR now. CNBC.
Good afternoon and welcome to Power Lunch, everybody. Along with Melissa Lee, I'm Tyler Mathisen. We got a big hour for you. Tech stocks are feeling the heat today, such as there is any heat here in New Jersey. The sector down another roughly 2% today after last week's fall. So are we in now for a tech reckoning? Plus, Bitcoin falling, dipping below $50,000. Yikes. We're talking to the CEO of the company that just launched the first Bitcoin ETF in Canada. And the race to vaccinate is on. But one major hurdle, some people still do not want the shot. We'll dig into who they are and the numbers as Power Lunch starts right now.
And welcome to Power Lunch. I'm Melissa Lee. Stocks well off the lows of the session, but the S&P now on track for a 5-day losing streak. That would be the longest since February of last year. Tech leading the declines. Bob Pisani has more on the markets. Bob, it looks like it's all about rates right now.
Yes, higher rates are hurting tech. So it's quite simple. It's the reflation trade versus technology stocks. Tech are weak because of higher rates and concerns about that. Just take a look today. It's playing out just like everybody thinks it plays out on reflation. So you got energy, banks, materials doing well, industrials holding up, tech's lagging. If you look at big cap techs, it's the big semiconductors and essentially mega caps that are moving technology down. So your Teradons, your Microns, Xilinxes, Microsoft, Apple. Apple's 12% off of its high recently, and Amazon's gone nowhere for a few months now. Mega cap, just want to show you percentage from highs might be a good way to look at this. Facebook's been going nowhere for a while. Apple hit a new high last month. Amazon hit a new high back in August, believe it or not. And Alphabet and Microsoft are doing okay, but you know, you can't really do this on just Alphabet and Microsoft. Actually, Microsoft's down a little bit more today, closer to 5%. In terms of the reflation trade, year to date, it's very obvious. You can see where everybody wants to put their money right now. How many people have money in energy stocks, though? Seriously, I know it's up 20%, and China trade, there's the reflation trade, it's all up. But how many people own Exxon and Chevron? How many people own, Freeport-McMoran, stuff that's moving up? Banks may be a little wider ownership. Copper, how many people own material stocks? It's 3% of the S&P 500. The Russell 2000 may be a little broader, but even their participation is fairly small. If you look at the S&P 500, essentially, Tyler, we're kind of moving sideways. So if you're an index investor, you're fine. The problem here overall is if you're an active investor, it's tough. You own tech stocks, right? You don't own energy stocks. You don't own Freeport-McMoran. It's a little bit of frustrating time for the individual investor right now. So we're rotating around. We're not selling off. We're just kind of rotating around. Tyler, back to you.
All right, Bob, thank you very much. Our next guest says the bull market is still very young and not to give up on tech stocks just yet. Let's bring in Jim Paulson, Chief Investment Strategist with the Luthold Group. Jim, always great to see you. Let's talk a little bit about that reflation trade that Bob was mentioning. You see inflation on the horizon. You say it's here. How big, how fast is it going to get?
I think that's a great question, Tyler. I'm not sure I know the answer to that either. I certainly see inflation picking up. You see it with commodity prices. You also see it now in the major indices like the PPI and even the CPI. I think you're going to have headline CPI, go above 3% this year, maybe even 3.5-ish around, and core PPI, I think, or core CPI might make it above 2. So I think inflation is here. But I think the question is it going to, be runaway inflation, or does it really just reflect how much the economy is picking up from a real growth standpoint and from how low inflation was to start this recovery. I lean a little bit towards the view that although inflation's coming up a little bit, I don't think it's going to get out of control. You know, there's still a lot of major disinflationary forces in the world, lousy demographics in the developed world and lousy demographics in China. We still have more, the U.S. economy is more globally competitive than ever in its history. We're being led by a deflationary force called technology across the globe, where sticker prices go down every year. We still have very high unemployment in the United States, very low labor force participation with excess supply. We've got an output gap in this country that's still lower than 83% of the time in post-war history. So there's a lot of reasons why checks, I think, to this inflationary pickup we're seeing.
All right. I just want to talk a little bit of IPOF. Chamath was tweeting a few days ago about fucking some shit up. We saw a nice run up on IPOF today. It opened at $15. It hit a high of $17.81. It's currently at $16.23. It's cooling off now. The hype is over. As for me, I missed the train. I'm just looking at it, just like you guys are. There's nothing much to do here on IPOF, but definitely something to keep in your watch list and see if it comes back down somewhere around the $15.50 level, $15. I mean, definitely, if it comes down to the $15 level, I'm going to scoop up some options here at the $15 level. This looks pretty good. But yeah, the trade for today is basically over. But yeah, see a lot of volume and a lot of opportunities here. If you like IPOF, it's cooled off. This is not a bad price target to buy into IPOF. 1623 is reasonable. You're not buying at the peaks. And you know that this is the level that has been here previously. So, you know, we'll see these levels. It's not too bad. But as for me, I'll just be looking at it and I'll keep it on my watch list.
Coming from all-time record low yields, but we're going to do it this year with some of the fastest economic growth we've had in the post-war era. Current consensus calls for about 4.8% real GDP growth this year. I think it might be closer to 8% when all the stimulus gets added. And if we have that kind of growth rate at a 1.5% yield, I don't think it's going to kill stocks. I think it's going to take higher yields before we get to there.
The context, though, Jim, to all of this is what you said, which is 0% interest rates. And that environment caused tech stock valuations to go high and to some people's eye become stretched. So I think the question may be, do you think rising rates, and if rates go to 2% or so, does that in fact pressure tech stocks specifically? Because there is research done that 80% of the time when the S&P 500 information technology sector is down, the S&P 500 trades down as well, and this data goes back to 1989.
Right. I don't, Melissa, I think technology sector is going to underperform over the next year. I think it's moved to broader market plays, small caps, cyclicals, international markets are going to do better. But I don't expect that it's the most likely outcome that tech suffers a severe collapse. I think it's going to participate but underperform. I mean, this kind of growth in the economy also benefits technology. It's just that their steady eddy fast growth rate now looks small in comparison to what cyclicals and small caps with operating leverage are doing in a strong economy. So my point is, I would own some tech. I think it might underperform, but boy, you're going to be glad you own a little bit of that on days when the overall cyclical market pulls back and holds up your portfolio value. So that's kind of how I would look at it for the rest of 2021.
All right, Jim, thank you very much. We appreciate your time today. As always, Jim Paulson.
Thanks for having me.
Of Luthor. Melissa.
Well, as for the broader economy, the first quarter was meant to be when the U.S. felt the worst impact from the COVID surge, but that might not be the case. Steve Leisman is here with a rapid update. Steve.
Yeah, Melissa, really big changes in the outlook for growth this quarter, powered by strong consumer spending we saw in January, leftover fiscal stimulus from last year, and more stimulus expected. But the higher growth, as you're just talking about with Paulson there, comes with growing concerns about whether the economy will run too hot. The CNBC Rapid Update showing the average forecast looking for 6% growth this quarter. That's almost double what was forecast last month. Better growth expected to continue for the next 2 quarters, between 7 and 9%, before coming down to a still strong 4.3% by year end. For the full year, growth is forecast at 6.5% now. On inflation, Goldman Sachs said it was less worried than others because the relief is a one-time event and imports should offset pricing pressures. Under Goldman's scenario, the economy should be back to its potential by the end of this year. And a lot of this guy's going to come up tomorrow in Fed Chair Jay Powell's testimony, or annual testimony, semi-annual testimony in Congress. Melissa?
Steve, I'm curious, if you had the opportunity to ask him a question tomorrow, what would you ask him? Because I think a lot of market participants are obsessed with this fact that the bond market seems to be telegraphing the expectation that inflation will, in fact, be hotter. And so whether or not Jay Powell and company decide to do anything with where they stand on monetary stimulus, it could be the bond market that just decides what to do anyway.
I think that's a good area to question, Melissa, the idea of how much tolerance do you have for higher bond yields? At what point do higher bond yields start to impact the ability of the economy to grow or become constraining on the economy? I think another important question is whether or not any of this would lead the Fed to back off. Any of the growth numbers I was just talking about would lead the Fed to back off on that $120 billion of monthly purchases that it makes.
All right. Steve, thank you. Steve Leisman.
Pleasure.
We've got a news alert on a bill targeting Apple that is moving through Arizona. Deidre Bose has got the details. Debo.
Hey, Melissa, that's right. It is a key bill targeting both Apple and Google and the way that they operate payments within their app stores. It has just passed the Appropriations Committee in Arizona. Now, it still has some ways to go, which is why you are not seeing Apple or Google shares react much. It moves to a full vote in the Arizona House expected later this week or early next week. But a similar bill, guys, it failed in North Dakota last week. And during that hearing, Apple testified that that bill threatened to destroy the iPhone as you know it. So there's a lot at stake here. And the idea that it's going to the next step and that other states are considering similar bills, that is a key victory for some of the developers that have been fighting for this for a long time. And it builds on recent momentum.
Let's talk about RSVA. This is a new merger, guys. RSVA. This is another one that just ran up already. We're a little late on it. RSVA. We're a little late on this one. This was announced today. I'll possibly make a video on this one. I'm not sure. I haven't done any research. Battery maker Enovix to go public after a $1.1 billion merger deal with SPAC Rogers Silicon Valley acquisition. So RSVA seeing a major pop here with a lot of volume. This is another one to throw in your watch list. This is a potential here. Today, RSVA opened at $20. It ran up for a high of $28.50. It's currently at $22.30. It's pulling back. So RSVA, it's a new announcement from today at 9:13 a.m. Eastern Time, right before the open of the market. Let's see here. You might want to throw this one in your watch list.
That we have.
Some say this is my greatest challenge ever, but I've seen centuries of this. With a companion that powers a digital world traded with a touch. The gold standard, so to speak.
Get an edge. Invest like a pro. Access CNBC's live streams around the globe. Unparalleled access to CNBC experts. Actionable investor insight and ideas. Start your free trial today at cnbc.com/pro. Total market coverage in your hands. Now on the CNBC app. Up-to-the-minute updates, breaking news alerts, everything you want to know when you need it. Stay connected, stay informed with the CNBC app.
Good morning, everybody. How you doing?
Here's a hint about how to make working from home less stressful and more comfortable. Make the switch to X-Chair. No matter where you put the amazing X-Chair, it instantly becomes the most comfortable place in any space. Infinite side-float recline and dynamic variable lumbar support make the X-Chair a customer favorite at home and work. Don't forget, the X-Chair lets you customize for the same measure of amazing comfort no matter what your size. And every model is in stock, ready to ship the next day, so you can join the thousands of others who have discovered the joy of working in comfort. Once someone sits in an X chair and feels the amazing DVL support, it's almost impossible to get them out of it. But don't worry, you don't have to share because there's an X chair for everyone. And you can get $100 off any model on our website. Your new normal? Incredibly comfortable. Call or click to order today and receive a 30-day risk-free trial. And
if we take a look at the futures market, this is the SPX. This is S&P 500 futures. We're seeing a dip right now. This is a simple 10-day simple moving average. This is a bullish trend in the market, and we see dips here. We see dips and bounces. This looks like a buy the dip opportunity across any of the stocks that you're currently following. We might see a continuous downturn for maybe 2-3 more days, and then we'll see a follow through to the upside. Now, if this dip doesn't continue within the next 3-4 days to go up, and we see this melt away, then this is a problem of worry. This is caution. If we see this roll over, we're screwed. But 9 or 8 times out of 10, we see that these are just market. These are just gifts from the market gods. These are buying the dips opportunities. This is why we see the market across selling off. This is just normal correction. Nothing is linear. So just keep it simple, guys. I don't like to put a lot of indicators and clutter my charts. They're pointless. I tried them before. I used to have about 10 different indicators ranging from RSI to MACDs to Bollinger Bands to, name them, guys, to what was the other one? CCI. These are just market noise. I keep it simple. I look at daily charts with simple moving averages. And this pretty much paints the picture of a bullish trend. You buy the dips every time it hits, and you'll be making money. Yeah, looks pretty bullish here. Let's see what CCIV is doing. It's going back down to 58.62. I'm looking into buying some options at 58. This is just a simple day trade I'm trying to do. I'll just probably buy one option, maybe 2. It's not something that I see high conviction. Buying at these levels is a little dangerous. I would prefer to buy around $50, like how we saw the dip on Friday. But we'll see what we get here at 58. If we see 58 level, I'll buy some options for power hour just to hold. I'll probably just scalp a few bucks. I don't know. So overall, I'm bullish. So if this continues to break below 58 and I buy these options, I won't be scared. I'm gonna buy some time. It'll be fine. So maybe I do a little quick trade today. I don't know. I haven't done anything other than sell my options I had bought Friday. I sold them at the open today. It was a perfect opportunity to sell at the open today. So we'll take a look and see how this develops. We have another about 40 minutes before power hour. So if we see this go down to 58 within the next 40 minutes, I'm definitely going to buy some options. You can buy some options now, but I'd rather just wait. I'm not too crazy about this trade right now. Momentum is slow. It's sideways trading, and we're trading within a range of $58 and $62. And I don't see any massive buying or selling coming in any direction. So I pretty much anticipate today to be kind of a sideways trading day at these levels.
$100 off.
You've been fielding phone calls from?
Yeah, so far we've seen both, trading partners, players that are active in the space already, the fundamental investors that are long-only investors that are coming in and buying in small pieces so far. And then, of course, just long-term kind of portfolio managers, advisors, investors that are both traders and active and long-term investors. So all of them. I think the big opportunity will come when we start to see Bitcoin become a core part of large portfolios, whether that be mutual funds, institutional pools, and others that I think are going to be exciting to see. And this is what ultimately this is about. Like, you bring an efficient vehicle for people to access this when they haven't been able to in the past. That's what we expect will really help change Bitcoin's positioning in long-term asset portfolios.
I know you're not a fan of multi-coin portfolios, Sam, but is there any thought to launching, for instance, an Ethereum ETF?
Yeah, look, we as a firm are quite bullish on the entire space, specifically, I think Bitcoin for its properties, and then Ethereum for different properties, being more of the technology and unique attributes of how it is really focusing on decentralized finance and other applications. So we like Ethereum. We like the position. It's a much more illiquid asset relative to Bitcoin, and so we'll be working on that. We launched a corporation a number of years ago called EtherCap, which we've had a lot of experience in this, and in holding Ether directly, and frankly, I think it's a lot has changed there, but we're as excited as ever on Ethereum on top of Bitcoin.
All right, Sam, great to speak with you. Thanks for your time.
Great to be here, guys.
Sam Safe of Purpose Investments. Tyler.
All right, Melissa. After.
Okay, guys, I'm going to replay this. This was pretty good, pretty interesting. I think they were talking about the new ETF for Bitcoin. I think this is a Canadian ETF. I saw this.
I think what you're getting at, Sam, is that the ETF will track the
yeah, there we go.
Finance.
So let's take a
Purpose
look.
Investments. We're joined now.
Bitcoin Trust is a closed-end.
Okay.
Conducting transactions and the amount of energy.
Well, first and foremost. Here, Melissa.
So this is an ETF, and how does it differ from, let's say,
should beware.
Okay, let's take a look at this.
Can be
new crypto ETF out of Canada.
I do worry about potential losses that investors in it could suffer.
But not all countries are so bearish on Bitcoin. Just last week, Canadian regulators approved the first ever Bitcoin ETF created by Purpose Investments. We're joined now by the CEO of Purpose Investments, Sam Safe. Sam, great to have you with us.
Great to be here, Melissa.
So this is an ETF, and how does it differ from, let's say, the Bitcoin Trust that we know?
Well, first and foremost, it uses the elegance of the exchange-traded fund structure that we all know so well, within the equity markets and the bond markets, and effectively now applies that same structure to the Bitcoin asset, which, unlike the Grayscale Bitcoin Trust, is a closed-end, which will have supply and demand mechanics in it. This will trade efficiently and track the price of Bitcoin over time, which is really an important metric. I think a really important validator for the asset itself.
I think what you're getting at, Sam, is that the ETF will track the underlying asset versus for instance, the Grayscale Bitcoin Trust, which actually has a premium above the asset. Is that correct? You're getting a much better tracking mechanism to the actual Bitcoin.
That's right. And look, this is an efficient way to ensure that it will always track because of the market maker functional elements to an exchange-traded fund, which makes sure that during the day, the price will move in line up and down with the Bitcoin price. And won't trade at a big premium or discount like you would see potentially in a closed-end vehicle.
So what sorts of interest are you getting in terms of the kind of investor? Is it mostly the retail investor, or do you also have institutions looking at this simply because the other alternative in the market out there is a trust which trades at a premium to the underlying asset?
Yeah, actually, we've been quite amazed and overwhelmed by the early response. So we're seeing really strong retail order flow, of course, and then, of course, institutional flow as well. I mean, the size of the trading in the first couple of days has been rivaled some of the biggest ETF launches in history globally, not just in Canada. What's really nice is the amount of interest coming in by the phones from institutions that are really been watching it for the first few days and now saying, look, we understand how this is going to track and we're excited about being able to use it. So, what we haven't, I think seen broadly within the space is the fundamentals based institution, the long-term holders. And those are the ones that I think are going to be really exciting as this product becomes more positioned for them.
Can you walk us through the types of institutional investors you've been fielding phone calls from?
Yeah, so far we've seen both, trading partners, players that are active in the space already, the fundamental investors that are.
Yeah, so I saw this earlier today. Yeah, this is pretty cool. New Bitcoin ETF. There's plenty of institutions dying to submit their Bitcoin ETF to the US market, and they're all getting rejected. And Canada has successfully submitted their Bitcoin ETF. We saw Bitcoin today have a massive sell-off. I just saw this today. I didn't even know it had a massive sell-off. It hit around 47,000, and now it's back up at 53. Wow, what a buy the dip opportunity. That is crazy. And once again, if we look at my 10-day simple moving average, it hit those levels and bounced back up. I mean, this is the simplest way to trade. I mean, it doesn't get any easier than this. But yeah, I thought this was cool. I just wanted to share this. I saw that they were talking about the ETF, and crypto. Sometimes I tend to trade it from time to time. But yeah, I think it's exciting, and there's a lot of opportunity there. But I've missed a lot of the trades, so I just look at it from time to time, and I like it. So that was a cool video there.
Double digits this year, and the ARK Innovation ETF saw about 150% gain last year. These are meant to be long-term plays, and Wood's investing style can be sort of volatile short-term. Those funds lost 20% or more during the March bear market last year. Kathy and ARK Invest did decline to comment on her Reddit popularity. Tyler, back to you.
So did I see those numbers right? Since the first of the year, basically many of those funds.
So these are the levels from my previous video. This is optimal, around $50. This is optimal time to buy. I like Lucid at these levels. I would heavily go into some options here. At these levels, around $58. It's at 50.81 right now. I mean, these are just little trading opportunities. I don't like to short stock. I used to short a lot, and I've made some crazy short trades, but I've gotten smoked. I mean, it is impossible to short. I've made some crazy. I think it was something like 10,000% return. Not even like 1,000, like 10,000% return shorting the market. And in the end, you always give it back. I mean, it's impossible to short the market. I'm just tired of it. I just rather long the market or long instruments that make sense to me. Shorting is just very difficult. The old me would have shorted CCIV right now, no doubt. I would have been shorting it this whole time and lost money. Now I'm on the long side. And I think it's holding around the $58 price point. According to the levels here on the depth market, I see support at 58. I might take it for a little trade, but sometimes I'm not so inclined to take the trades because they're small. I'm risking money for a small gain, and I don't like to scalp. I like to hold and really get the payoff. If I see a really nice dip that is not normal, like Fridays, I did buy that one, and I scalped it for some nice returns. It wasn't heavily, but in this situation, excuse me, I'm just looking at the stock, and if CCIV were to go down to these levels because of the merger was a disappointment, and it goes down to 50-50 or goes down to 40, I'm definitely buying. If the merger gets delayed, the implied volatility is going to get crushed. The stock is going to fall apart, and it's going to create buying opportunities. If that happens, that would be fine. Now, if the merger gets denied and there's no deal, then obviously there's going to be a massive sell-off and we're all going to lose money. But there's too much evidence that it is not going to happen. If the merger doesn't get announced tomorrow, I will not be scared. That wouldn't be a problem. If it gets delayed, that's perfectly fine. I mean, that's just going to create more buying opportunities. If the merger doesn't get announced tomorrow, it's going to dip, it's going to pull back, and it's going to give us opportunities to buy again. I do think that we're going to see a merger very soon, though. There is a lot of Bloomberg Terminal information and posts and updates and articles every day, and now it's getting a little bit more serious. Earlier, I put the article from Mexico. Let me pull that article out. I think I went over that. Is this? Yeah, this is it. Looks like CCIV will be listed on the BMV, which is a Mexican exchange. And now we're seeing that CCIV is obviously trading in the New York Stock Exchange. This is why we're trading it. And it was added into the Berlin exchange. And now it's being added to Mexico. This is the first time I've ever seen a SPAC get added into world exchanges before a merger announcement. This is why I'm extremely bullish. I mean, there's too much evidence, guys. There's too much. I mean, it's just a matter of time. Don't lose your patience. Don't lose patience and just stick to the plan. This is from Saturday's article. Again, in bold, Lucid transaction could be announced Tuesday. I just like these announcements because they create buying opportunities in trades. When the stock is falling apart and these articles come out, there's buying opportunities. When there's disappointment, you just buy the dip, and then and then there's the news articles coming out, and it makes everybody buy into it, and then that's when you sell your trade. Now I have shares. I don't trade my shares. I'm holding these shares. I have about an average cost of like $18. Now when I trade the options, I'm just looking for little opportunities to scalp. So we have again. Now we're seeing that this is going to be added into the Mexican exchange, and we see more hype confirmation articles here to create trading opportunities. I like these articles. I like them for trading opportunities. That's all they are. And overall, I'm very bullish on the look of CCIV. So my shares, I'm just holding. I mean, if you're a shareholder, I mean, there's no need to think about it. Just hold on to your shares. I mean, this could be the next Tesla. We all missed the Tesla train. I know I did. And this could be the next Tesla opportunity. And this could be like buying Tesla at $40, $20, $50, whatever the math dictates. I haven't done the numbers. And this could be a 10x, 20x opportunity. I mean, not overnight, of course not. But if you're holding shares, you're not on options, you don't have any time decay, and you could just write it out for the next few years and make massive returns. I mean, it's the easiest, most hype trade to do right now. The way CCIV structured this with all this hype and rumors and evidence, it's just amazing, because for a lot of people that didn't know about CCIV, it's creating a lot of attention to the stock ahead of time before the merger, raising millions of billions of dollars, which is fantastic. Great job on the CCIV Michael Klein SPAC. I mean, fantastic work, guys. And now we see more hype, and I think they're going to milk this. They're going to keep on hyping it, and they're going to continue to release new articles. And I think it's great. It's just going to create a lot of trading opportunities. This is the way you have to see it. You can't get shooken off. The only reason you get shooken off is if they literally say there is no deal, and it comes in the Bloomberg terminal that the deal is terminated. There is no deal. I mean, this is the only way I'll sell. If it continues to get pushed back or whatever the situation happens, I mean, I don't care. I'll just hold. I'll just hold and write out the volatility. I'll write out the dips. That's fine. But yeah, we're seeing a lot of information out there. So yeah, stay bullish and let's stay positive. And it's holding the $59 price point. Let's see here, compared to my chart here, 59 around here. We're looking at a $15 billion valuation. We're looking at $60 a share compared to NEO. Let's see if I have that here. Yeah. So this mark pretty much says that right now CCIV, if they were to merge with Lucid, we're talking about equal valuation of comparable to NEO. So yeah, this is just my overall bigger picture price targets.
Huge part of that story you just mentioned here. Right now, the U.S. benchmark West Texas Intermediate, or WTI crude futures, $61.70, 4% gains there. World benchmark Brent crude futures, $65.13, 3.5% gains there. Now, one of the big reasons why is, simply put, that it could take longer than previously thought to bring all of that Texas oil production capacity back online after last week's deep winter freeze. You had millions of barrels per day of oil, billions of cubic feet per day of natural gas effectively offline because rigs were shut down due to the weather. It could be multiple weeks now, say some experts, before getting back to pre-storm output levels for both oil and gas. Meanwhile, you've got an interesting dynamic playing out in equity markets as well. Speaking of those interest rates Melissa just brought up, traditional oil and gas stocks continue their march higher, like she said, because of the commodity prices. Meanwhile, though, check out alternative energy stocks like solar, wind, battery, other power sources sharply lower today and over the past couple of weeks here as worries over higher interest rates dent valuations, and those concerns hit those momentum stocks. So, Tyler, oil and gas traditional on the rise.
Okay, I saw someone mentioning about Tesla. I want to address Tesla. I trade Tesla a lot. I used to trade Tesla a lot. I definitely traded Tesla and made money when the stock split was announced. Oh my God, that was fucking amazing. I made some good money on those trades. That was the easiest trade. I mean, I love Tesla. So let's take a look at Tesla. And these are my thoughts with Tesla. Let's take a look at the charts. We're seeing Tesla melting away. I mean, this is insane. I mean, does it have to do with CCIV? Possibly. I don't know. But to me, Tesla is the creator and founder of this industry, of this sector. And obviously, he created the infrastructure of a new industry. So I see Elon Musk and Tesla as like the leader, and I see them in high regard. But the valuation, and I don't want to get too much into the fundamentals, the PE ratio of Tesla is like 1,100 to It has a 1100 PE ratio, which is ridiculous. Apple has like a 30 PE ratio. Amazon has like a 60 PE ratio. Tesla has like a 1100 PE ratio. This is insane. Like, I haven't traded Tesla. When they did the stock split back here, I definitely bought some out of the money calls. I killed it. I continue to buy it and roll it, and I continue to kill it. And then at this point, I continue to roll out of the money calls, and I got, again, chopped here, chop. And somewhere around here, I just gave up on it. I don't trade Tesla anymore. I mean, this looks fantastic to short, in my opinion, right now. I would totally short Tesla right now, but I'm done shorting. I lost too much money shorting. So when I don't know what to do, and I just step away. I just look at the things that makes the most sense, and if I get in a good price, then I just like to write it out. Most of the time I'm just looking at different stocks. I don't do anything. I don't touch anything. So personally, Tesla, I think it's a leader. I think it's super overpriced. I think it's gonna come down. I think it's probably a $200 stock, but will I ever get there? I don't know. I love Tesla, and probably not. Everybody loves Tesla, and the people are just basically holding the price and creating their own market. So I don't want to see it crash and burn, and I'm not going to short it. I'll just look at it. You can long it at this dip if you feel bullish. You can short it. Normally, I would have shorted. I'm not doing any of those things. I don't want any time decay. I don't want to get chopped. And I don't see a clear play. I see a lot of opportunities in the SPACs right now, and CCIV. There's a lot of attention, a lot of money flowing into these lower cost SPACs. So I see the large cap stocks. Let's take a look at Facebook. Let's take a look at Apple. All these large cap stocks, I see that people are no longer trading these. Everybody's going into the SPACs, and that's where the money's at. I mean, before I would just long anything NASDAQ, and it was easy money. Now, if you're longing anything NASDAQ with options, you're going to get smoked with the time decay. So there's no real opportunity. And, once I get chopped enough, I look for a yield somewhere else. So now I'm just trading a lot of SPACs. You see big institutions trading the SPACs too. I mean, so as for Tesla, I'm bullish on Tesla. I like the stock. I'll never short it. And I just personally, if you're not in it, I don't see a play on it. I don't want to touch it. I won't look at it. And I see CCIV as being my opportunity for that long-term hold because I missed the Tesla train. So this is why I make so many videos on CCIV, because the opportunity is phenomenal. So this is pretty much what I think on the whole Tesla and EV industry. You also have companies like Canoo, you have Lordstown Motors, you have Workhorse, you have Fisker. A lot of these, some of these are going to be losers, but the reason why I'm bullish on CCIV is because they actually have a manufacturing plant. They're actually going to start delivering cars this year. They actually have a lot of funding. They have Saudi Arabia backing them up. They have, they have people from Tesla working at their facility. Peter Rawlinson is from Tesla. You have a lot of things working for CCIV. This is why I'm bullish. There's a lot of evidence, and this is why I see the opportunity. If you like Tesla, I like it too. I can't touch it at these price points, so I'm touching CCIV. This is where I see the opportunity in the short term for now.
I'm talking about the vaccine, and they were like in the chat room, what about Tuskegee? What about this? I won't do it. And so I knew then that we had to really inform our team members, our leaders, and our staff. And then they started saying, but if you take it, I'll take it. We started every day sending out Q&As, information. What about this? How was it studied? How was that? Because we did a study and 70% of our staff members did not want to take it. 70. We are now over 50% have already taken it. We've swung the other direction because of information, and it was one-on-one information. Someone was concerned about research. Someone needed to understand. And then I told them, do you today see braces on their legs and people in wheelchairs and iron lungs? Those who have been around a while, they go, no, that's polio. And I said, well, what fixed that? A successful vaccine. I said, we have to understand this is not an American problem. This is not a Black problem. This is a worldwide pandemic, and the vaccine is a worldwide solution.
Anita, thank you very much for being with us today. Anita Jenkins runs
My
the
honor.
hospital at Howard University. Thanks again.
Thank
Melissa.
you for having me.
Now over to the bond market on the big day for yields. Rick Santelli's tracking all the action at the CME. Hey, Rick.
And Melissa Lee, it seems as though every day lately is a big day for yields. As you look at a chart of 10-year note yields that starts midweek last week, and I picked Wednesday for a reason. If you look, we had three tops, basically 132-ish. You see them on the left side. And now we're coming down and holding those levels. Our intraday high is 139. That was from the wee hours of the morning. Let's look at a month-to-date chart of 10, shall we? And I find this really fascinating because there's only been three sessions in the entire month of February in 10-year notes where yields have gone down. So you really see that the momentum is to the upside. We're continuing to be guns hot. And if you look at a year-to-date of the yield curve spread, this really drives it home, 10s minus 2s. We closed last year at 80 basis points. We're hovering at 125. Now we're up to 120.
All right, guys, let's talk about Rivian. I saw a message there about Rivian. I think this is a good company. Let's look at Rivian. Give me 1 second, guys. Here we go. All right. So I like Rivian. It has a lot going for it. If we take a look at this article, give me 1 second. Amazon is test driving Rivian electric delivery vans in Los Angeles. This was from just a few days ago, February 3rd. Sorry about that. So basically, Amazon is in with Rivian. They're making a deal with them. They agreed to buy 100,000 Rivian electric vehicles as part of their pledge to achieve net zero carbon emission by 2040. I think this is fantastic. I like how the truck looks. I don't know much about their manufacturing. I don't know where their plants are. I don't know. I have to do more research. But just as a blanket statement, just like an overall scene from face value, I really like. I'm really bullish in Rivian. But here's the problem: there's no way to invest in Rivian. It's not a publicly traded company. It's a private company. So there's potential of an IPO later this year, but if they go through a traditional IPO, the stock could be $50, $100, $150 when it hits the markets. The only like hope and glory we have as like small retail investors is if Rivian does a SPAC merger. I mean, we're gonna see. This could be huge. I mean, if Rivian does a SPAC, I'll definitely be hunting and sniping it for an opportunity. So I'm looking for Rivian here. Yeah, I do like Rivian. Thanks for bringing that out to the chat. But there's just no way for us to make money in Rivian at this moment.
Can we even afford this house?
I'm pretty sure we can. Pretty sure. With Rocket Mortgage, you can be certain. Not pretty sure.
What's the difference?
Let me show you. I'm pretty sure these aren't poisonous. I'm pretty sure you do not run. I'm pretty sure these are parachutes.
All right, CCIV is falling apart. I'm just going to go with one option. Just in case if there's a follow through here, it falls apart. I'm going to buy the 50 strike for March. I'm buying the 1750s. I'll buy one. And if it continues to go lower, I'll average in and I'll continue to buy another one. So let's see here if I get filled at 1790. Okay. Don't make me replace my heart. Filled. Okay, so I bought one option. Nice little trade here. I bought the 50 strike for March on this dip. I see it's falling apart. It's at 57. So if this continues all the way down to 55, I'll buy another one at 55. So I bought some time on it. So I'm not too concerned. I bought March. I have a few days. So let's see this price action. Let's see if it continues to fall apart, guys.
You from overpaying on workers' comp. Try Pi instead and save up to 30%.
30%? Really?
Sure. Get a quote in 3 minutes at easyaspi.com.
That is easy.
So, need another reminder?
No, I'm good. Reminder for what?
Oh, yeah. Need workers' comp insurance? Get a quote in 3 minutes at easyaspi.com.
Mr. Wonderful here. It's hard for everyday people to get access to startup investments. But with Start Engine, you can choose between hundreds of startups to build your portfolio. It's your turn to become a shark. Visit startengine.com today.
You know what hurts? But you know what's painless?
using ZocDoc to book a same-day appointment with a doctor who takes your insurance.
Thanks.
What you say? ZocDoc makes healthcare easy.
CNBC Select helps you choose the best credit card for you. With cashback, balance transfers, best offers. We do the research. You pick the card. Don't guess. Select. Go to cnbc.com/select and take control of your money.
Time for today's Power Movers. First up, Cooper Tire announcing the company will be sold to Goodyear. The deal, valued at $2.5 billion, will make Goodyear the world's #3 tire maker based on revenue. Both Goodyear and Cooper Tire are surging on this news. Connecticut-based People's United Financial up more than 50.
Next levels we're looking at CCIV is $55, guys. We're looking at $55. I see some support at $55. So if we hit 55, I'll buy one more call option for March. I'll probably, let's take a look at here at the options chain. So right now I'm currently down, what is this, $30? Okay, I'm $20. Okay, so let's take a look at March. Yes. So we bought these. If we go down to 55, yeah, I'll buy the 55s. So if we go to 55s, I'll buy the 55s. Let's take a look here. No, actually, I'll continue to buy the 50s. Okay, we're seeing a bounce. I actually should have bought the 55s. To begin with, I bought the 50s. It's fine. It's just a little bit more protection. This is just a little shake off, a little scare maybe. I don't know. Okay, I'm up $15. No big deal. So I bought the 50s. Let's see if we see this. Yes, I definitely saw support at 58. We're seeing a bounce at 58. We have support here at 56 and at 55. This could be temporarily, or we can see a nice rally up. There's plenty of sellers here, guys. So remember, when you see a lot of sellers, that could also be positive. We can see buyers coming in and just gobbling up the selling. So yeah, we're seeing a nice bounce, just as I predicted at 58. This could be just a minor pullback, and we can actually go lower. So we have to wait and see just a few more minutes just to see where we go from here. There's possibilities that this is just a breather and the shorts are getting out, and we can go lower. We can definitely go lower to $56 or $55. We just have to wait and see to see what Power Hour gives us.
15%.
Continues through 2021, and that's going to include consumer cyclicals. So the one pocket within there that really stands out to us right here is specialty retail, because that's a pocket where you're seeing participation broaden out. It's not just TJX. It's Ross stores. It's Burlington stores as well. So I'll chart TJX because that was part of the lead-in. The stock broke above its pre-COVID peak in the fourth quarter in December. It consolidated there, came back, tested that breakout point in January. Very often prior resistance becomes support. That's what happened. Now inflecting higher again. We think that is a resumption of a very big breakout in price, and that we expect that price to continue to go higher.
Ari and Katie, thank you. Apple's back on top in smartphone market share, but can the stock rebound? Head to our website and follow us on Twitter for more analysis there. Tyler, over to you.
All right, thank you very much, Seema. Can you hear me now? Very good. Apple shipping more smartphones than any other company. Seema just mentioned it in the last quarter of 2020, topping Samsung for the first time since 2016. We will talk about the latest battlegrounds in the fight for cell phone supremacy. That's next, and as we head to break, take a check on the markets. The Nasdaq down more than 1% as tech leads those stocks lower. The Dow up about 0.5%. Be right back.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
Many traders like to watch technical patterns, and one of the most popular ones is called the Golden Cross. The Golden Cross is where the 50-day moving average moves up through the 200-day moving average. And while this pattern is not intended to get you in at the very bottom, it can often be an effective entry point for a stock or ETF that's in an uptrend. I'm Randy Frederick, and Schwab is the better place for traders.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 92% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
All right, guys, just as I anticipated, we saw a bounce at $58. We just have to be on standby to see if it holds. This is basically what I was waiting for. I almost bought options at 59, but I wanted to confirm at 58. This is where I saw the optimal risk reward opportunity. I'm not making much on that contract, $10, whatever. It's just basically volatility. That's all there. That is right there. But yeah, we'll see. Maybe we see this just being just a minor pullback, and we're gonna go lower. I don't know. But if we do go lower, the next hard point of support, the hard point of resistance is 55. And now we start going below 55. I'm looking into buying more at 50. So I'll buy more options at 55. If we go to 50, I'll buy more options at 50. So this is kind of how I plan on playing it. I don't think we're going to see this go any lower. I think we hold above the $58 mark. Not sure. Let's see. This hit a low of 57.11. So definitely bounce back. We'll see. We'll see what the day gives us. Maybe we see another sell-off towards the end of the day, like how we did on Friday. I mean, right now, this is a volatile stock. And chop is in play. Hype is in play. Chop is in play. So if we take a look at my chart from my previous video, we're up here. We're sky high. This is a beautiful level to buy. Here, let me do this one here. Let me draw a trend line here. 55 price target. I like this level here. Let's go with the orange. Yes. Here we go. Okay, perfect. So I'm looking into buying here. Let me just clone this. 55 here. This looks pretty good at the 55 level. So I'll just put that one in there now. Let's take a look at what we're doing here. It's going back down. So this looks like we might go lower. This looks like we're going down to 55. We lost some momentum. We saw that we gapped up. We had a sell-off. We held the price. We tried to go higher, potentially 65. That was my next price target. It failed, and now we're falling apart. This looks very weak to me. I don't think we hold here. Possibly we do, but we might go to 55. Oh, we're getting a little kiss there. We're getting a little pop. All right, power hour is coming in 7 minutes early. All right, let's go. Okay, we might go up. All right, let's see. Let's stick around. Let's see what this delivers. Let's see what IPOF is doing right now. IPOF at 1645. RSVA, was that the other one? RSVA, the other stock that I mentioned today that announced the merger at $21. Wow, a lot of people who bought at 25 plus got smoked on this one. When these kind of stocks happen, I just take a look at them. I wait for a pullback. I'm going to put this one on my radar. There's possible something to do here. There's possible a trade to do here. If we look at SMPR, this is one that I own. I'm at 1560, so I'm actually under on SMPR. Not a big deal. I'll draw it out here. I'm at 1560. I think at 1565, something like this. So I'm under right now on my SMPR. I made a video on SMPR yesterday. If you haven't watched it, go to my channel. Make sure to go take a look. But yeah, SMPR, great buying opportunity. It has a very interesting business structure with advertising and data. It's a little bit different than all the other charging stations. And yeah, I really like it. When I was doing the research, I basically hyped myself and I bought into it. It looks pretty promising. So let's see. Oh, look at that. CCIV going back up. Perfect. Okay. All right. I'm up $90, 5%. I'm making 5% in about, I don't know, 15 minutes. It's okay. Not a big deal. It's just a small trade. Maybe I can scalp it for a few $100s. Hopefully it runs up. I mean, if I can scalp it for like 10 or 20% trade, then I'm going to sell this option today. It was just a little bounce. Since I saw the support at $58, I was just going for a little bounce trade. Nothing special. But it seems like, yeah, it's doing what it's supposed to be doing. It's at 59. Fantastic. I should have bought at 57, but I felt fine reasonably at 58. And now we're seeing here at the depth market, we're seeing a huge amount of sellers, which is good because this is what creates the momentum to go up. Sometimes it creates a wall and you can't pass certain levels. So it goes both ways. It's really tricky to read the depth market. Sometimes it works in your favor. Sometimes it works against your favor. So this huge red here, this huge lineup of sellers across different price points, that could create an explosion to the upside because the sellers are there. And if we see a wave of buyers coming in, we're going to see an explosion. But I still think maybe we don't go past $62. I think we're going to stay between $62 and $58 for the day. So they're just pretty much chopping it up and just, going sideways, being a little bit irrational, I guess. So, yeah, let's see what my options are doing. Okay, I'm up $100, 5%. Okay, maybe I close this for a $200 trade, give myself a $200 paycheck for the day, go get some lunch. I don't know. So we'll see where this ends. Volatility is going to be kicking in. We're in the last hour of trading. So that's when you see options really get mispriced and you're going to start seeing a lot of volume coming in. And yeah, looks pretty good.
Joanna.
Let's see what else I have to say. Let's just keep on taking a look. SMPR, good buying opportunity. Ipof pulled back. Rsva. All right, Rsva pulled back as well. If this Rsva comes back down to like $16, I'll take a look at it and buy some options. But for now, just throw in the watch list.
Thanks for sharing.
We see smarter software delivering cleaner power. Emerson's breakthrough technology enables the power industry to integrate.
Guys, today's my first day live streaming. If you guys like the live stream, can you guys put it in the chat? If you guys want me to do this tomorrow, be live all day. I'll be live all day trying to get that news, trying to get the latest on CCIV news. Right in the comments. I'm not sure if this is something I'll be doing every day. If you guys like it and enjoy it, definitely I'll come back tomorrow. But if not, then I'll focus on making more videos and company videos overviews. So just let me know, guys. Let me know in the chat if you guys want me to be here live tomorrow to see if we possibly hear the merger. All right, thank you guys.
Renewable energy sources to modernize and improve the electric grid. Emerson, consider it solved.
Keeping your oyster business growing has you swamped. You need to hire.
I need Indeed.
Indeed you do. The moment you sponsor a job on Indeed, you get a short list of quality candidates from our resume database. Claim your $75 credit when you post your first job at Indeed.com/promo.
You know what's making Sarah's migraine worse?
Okay, let's table that.
But you know what gives her some relief? Using ZocDoc to book a video visit.
You'll get the prescription this afternoon. Does that work?
Yes!
Oh.
ZocDoc makes healthcare easy.
I have big news. You can now brush and floss at the same time. This is Waterpik Sonic Fusion. It's twice as effective as regular brushing and flossing. Go online or ask your dental professional about Waterpik Sonic Fusion.
Your safety is our priority. That's why experts like Kyle install leaf filter gutter protection even on the coldest days. Snow and ice buildup on unprotected gutters can do real damage.
And the longer you go without leaf filter, the worse the damage gets.
Leaf filter filters out debris, allowing water to flow freely.
And you'll never worry about your gutters again.
which is safer for everyone. Call or visit getleaffilter.com. Save 15% plus an extra $100 off.
Hi, Mr. Wonderful here. I believe that startup investing is key to building wealth, but it's hard for everyday people to find access to these deals. Well, I've got good news. On Start Engine, you can discover hundreds of startups raising capital and begin building your portfolio today. For as little as $100, you can own a piece of the next great business. It's your turn to become a shark. Join me at startengine.com.
All right, welcome back, everybody. You're probably watching the bottom of our screen to see that the House Budget Committee voted just a few moments ago to advance the $1.9 trillion relief package being pushed by the Biden administration, sets the stage for the House to pass that bill as soon as this week. Meanwhile, Melissa, we look at the industrials. They're up a little bit. S&P, I think this would be 5 days in a row of negative closes. Haven't seen that kind of action in quite some time. The NASDAQ taking the main decline, 1 2/3%. It'll be very interesting to see what happens with that bill, because it gives immense power to individual Democrats in the Senate, because they've got to get 50 votes completely, because not many Republicans will go along with it.
It is a test of the Democrats' power.
If any.
And Tyler, this all could be helping to fuel that rise in the 10-year yield that we've been seeing, again, touching 1.39% ever so briefly, but really having an impact on how the broader markets are trading today, particularly the NASDAQ. One stock that seems to be defying gravity is CCIV Churchill Capital. It is a blank check company. There's another report today that is
CCIV, guys, CCIV.
up even more. It's up about 500% this year.
Live.
So, wow. Thanks for watching Power Lunch, everybody. Closing bell starts right now.
All right, they didn't.
Thank you, Melissa and Tyler, and welcome.
Okay, they didn't say much, but yeah, they just mentioned CCIV right now. There's a lot of hype, guys. There's a lot of hype for tomorrow. We're going to see a disappointment or we're going to see an explosion. But regardless, if we see a disappointment and we don't see this merger tomorrow, that's buying opportunity. The only way I will stop trading CCIV if the deal is declared a failure, that they will not be merging for whatever reason. Now, if there's no merger, that's fine. It's just going to get pushed back. But if somehow Michael Klein himself or Peter Rawlinson comes out and says, guys, we are not merging, the deal did not go through, which I highly doubt, guys, because come on, they're in Berlin. They're going to be trading in Mexico. They're everywhere. Like, they put in so much work. It cannot fail. Like, this would be too ridiculous if Michael Klein and CCIV put all this work into this SPAC merger for it to just fall apart for some figures, for whatever it is, that whatever reasoning. I mean, Andrew Liveris is partaking in this deal. Michael Klein partakes in the Saudi Arabia. I think that he was part of the Saudi Arabia Aramco deal a few years ago. I mean, it's a one big family here, guys. This is a beautiful family giving us this blessing and opportunity to trade these stocks and make this money. I mean, if tomorrow the merger doesn't happen, that's fine. Just buy the dip. You're going to see this explode anyways. Only way we sell is if absolutely one of these two guys come out and they say the deal fell apart. Like, they're angry. Like, something went wrong. And, like, this is it. Like, this is the only way. But other than that, not selling. Buy the dip.
Welcome, everyone, to Closing.
Of 2% right here. And as it's gone up, stocks have gone up. When the Fed has said it is not going to get in the way of a reflation move and of a growth story, then the market likes when we are in a reflationary zone. When you're back in 2018 or so, that was different. But right now, the Fed has said until you get up here and stay up here for a while, the Fed's not going to raise rates. So that actually is sort of in sync with the move in the market. Now, another reflection of that, banks versus mega cap growth. This is a relative chart. So it's basically the performance of the KBW Bank Index against.
All right, guys, I'm going to just do this a little trade. This was the one that I was waiting for sniping when it hit $58. It hit $57. It went $1 lower. I bought at the 58 mark. So I'm just going to put a sell order for a $200 return. It was just a minor scalp. So I bought at $17.90. So sell to close here. I'll put one here. We're at 19 35. I'll put a limit order for the day at 1990 just to make a quick $200. Let's see here. 1990 view options 1. Is that right? Is the math right? Okay, 1790, 1890. Okay, yeah, we're fine. So I'll put this limit order at 1990. Maybe I made a quick $200 right now while we're streaming. I don't know if we hit that. Power hour is here. We can see some volatility. We're seeing the nice little bounce. Definitely. Maybe I should hold this for tomorrow. I don't know. Those were not my intentions coming into that trade. So I don't know. Maybe I hold it. I don't know. I do have until March. You know what? Screw this. I'm gonna hold this one. Let me cancel this. I'm gonna hold this. I'm gonna hold this one for the week. Maybe I make 100% on just that one option that I bought. So you know what? Let's just leave it. I mean, the hype is real, guys. There's too much hype up here. Let's just do it. You know, let's just leave the trade on there.
Flights over the weekend?
So it's the airlines, and there's maintenance agreements that come into when you purchase an aircraft. The maintenance agreement could be with the OEM like Boeing, or it could be with the engine manufacturer. The engines tend to be in long-term service agreements with the engine manufacturer, which in this case would be Pratt & Whitney. Even with that, the engine contracts last about 6, 12, 18 years. So it's unclear as to where this engine was in its guarantee manufacturing process service contract to begin with.
Sheila Kalyalu, thank you for joining us with some perspective there. Boeing shares down 8%. After the break, sounds like a plan. We'll talk to the CFO of Spotify about the company's vision for the future of audio, its plan to grow its user base around the globe, and how Batman fits into the mix. Of course, Barack Obama and Bruce Springsteen as well. You're watching Closing Bell on CNBC.
now we see just a sea of sellers here. So we might get stuck here. We might get stuck here for the rest of the day. Action looks pretty dead. I don't know, unless something happens out of nowhere. But yeah, sellers are definitely dominating the buyers for now. But it looks very weak. Volume looks very weak at this moment. I don't see any major moves to either side, but the sellers are there to create some momentum to the upside. What can we see? I see a maybe $63 level, $62 level. Yeah, pretty much where we saw before. Yeah, so that's kind of what we see now.
Be bright, quiet, and safe. It's a change that'll be felt from this street to no street, and everywhere in between. All it takes is the slightest push in just the right place, and that will be the tipping point that changes everything.
I tried a laxative that's both gentle and fast.
Great tasting Dulcolac Soft Chews works naturally with the water in your body in as little as 30 minutes. Puts you comfortably in control. Dulcolac Soft Chews.
Get an edge. Invest like a pro. Access CNBC's live streams around the globe. Unparalleled access to CNBC experts. Actionable investor insight and ideas. Start your free trial today at cnbc.com/pro.
Thousands of years ago, even if you were sitting at the top, you really couldn't count on support. It took centuries for office seating to evolve, but there were some major holes in the design. Then people were inspired to do away with office chairs completely. Yeah, that didn't work. In 2020 came the breakthrough the world has been waiting for. The first ever XHMT heat and
Guys, if you guys are enjoying this live stream, I appreciate it if you guys hit the like. I mean, I don't have super chat, I don't have Patreon, I mean, I don't have anything. I'm barely up and coming, barely starting, really, putting a lot of time and effort into, making some successful trades and, bringing out the information. So I'll appreciate it if you guys, just smash that like, let them know we're out here doing the CCIV thing, making some money, and I would appreciate it. Thank you guys.
Shares of Spotify rallying on the back of some big announcements from its Stream On event earlier today, including expanding to 85 new markets, unveiling exclusive content deals with Warner Brothers and DC Comics, launching Spotify Hi-Fi, which allows users to upgrade the sound quality, plus Spotify Audience Network and podcast advertising. Spotify CFO Paul Vogel joins us now in an exclusive interview. Paul, very good afternoon to you. Thanks for joining us.
Great. Thanks so much for having me.
I wanted to start, if I may, on this deal with Warner's and doing scripted content. How much of that is really genuinely new? Because clearly there's a lot of audio content, some of which is scripted out there at the moment. What is the sort of new aspect of this?
Yeah, I think if you take a step back and say, I mean, for us, it's really about creative expression and allowing as many creative artists to, share their talent and share their work on Spotify. And what we've talked about is, our mission statement is to have over 1 million creators live off their art and connect them with over 1 billion consumers globally. And so that's what we're really focused on. And so for us, there's it's all types of different content, all different types of audio. Our goal is to be the #1 streaming audio player globally. And for us, it means continuing to add exclusive, originals, and differentiated content on the platform. And so scripted content is one. News, sports. Obviously, we've made acquisitions already. We've got licensing deals with some other people. So for us, it's really about just having the most differentiated and unique content we can have on the platform that sort of gets creators' work out there and connects with their consumers.
And when it comes to the DC Comics deal, I mean, on one level, you can think of the story to tell there, but on another level, you think of, Christopher Nolan's Batman movies, and you think they are very visual shows. They're not audio-based. How will you kind of balance those two competing factors out?
Yeah, I think audio is a very unique medium. I think there are different ways that you can express things in audio that you can't in visual. For instance, I think we talked about in the Batman example, being able to hear Batman's inner thoughts and inner monologue. And those types of things will be unique and differentiated, and being able to take stories in different directions where they haven't already gone. So we're just super excited about being able to have all sorts of differentiated and unique content on the platform.
I wanted to focus on the big podcast news, obviously, with President Obama and Bruce Springsteen, which is getting a lot of attention. You're clearly spending a fortune on content in podcasts. How are you monetizing it?
Yeah, I wouldn't say a fortune. I would say we're trying to be very thoughtful and strategic about what we're spending on content. I think when we look at the content spend for us, it's really about, again, driving engagement on our platform. It's driving new users, and it's exposing new and unique content to new and unique users. If you actually go back and look about a year and a half ago, we had said that by adding podcasts and that content on the platform, that we felt that they were correlated between podcast growth and engagement on our platform. And over the last year, what we really wanted to prove out is the causality. Like, is there an actual relationship between having this unique and differentiated content on our platform and actually driving increased retention, increased engagement, and most importantly, driving higher lifetime value? And so what we believe we're now able to prove is that by having this differentiated content, we're actually improving and increasing lifetime value for each consumer, user or subscriber that joins our platform. And so we feel really good about the investment we've made. We've said it a number of times on earnings calls that if you see us continue to invest, aggressively in this area, it's because we're seeing the returns on our platform from engagement and retention and reduced churn. And so we feel really good about the investments we've made so far.
Paul, is there any part of you that worries we might be in a bit of a short-term bubble in terms of the value of audio rights, whether music or podcasts or whatever, scripted content? I mean, it's not just the podcast area that Sarah mentioned, but clearly all sorts of musicians are selling their back catalogs and music rights for rich valuations. Do you consider that we're in a short-term bubble at all?
Yeah, what I can say is I think audio has been completely under-monetized relative to video for a long period of time. Video is 10x the size of audio. I think we said right now that digital audio is now being consumed each day as much as digital video. So we think there's a huge opportunity for audio to continue to grow and expand. We think there's new and exciting ways, whether it's music, whether it's podcasts or other areas. And so we think both the ability to continue to grow audio and then monetize it at higher rates is still out there. So it's not for me to really discuss sort of other transactions that have taken place, but we feel good about the deals we've signed, the acquisitions we've made, and we feel exceptionally good about the opportunities for audio and the growth over the next 5-10 years in the audio space.
Well, you've clearly seen a lot of growth, Paul, just in the last year as a result of people staying at home. It's sort of been an unlikely stay-at-home winner with people streaming. What happens when they're not cooped up in their homes and we are starting to get vaccinated and they go out? What happens to growth in audio streaming?
Yeah, it's a great question. I think, one of the things that we've talked about is we've seen a massive change in consumption habits and behavior over the last year or so. With people not commuting, with people not traveling, we've seen obviously a lot more consumption in home, in smart speakers. We've talked about game consoles have been a huge driver for us. And does that continue or does it shift? I think we'll have to see. I definitely think that, the timing of when things open up, we all hope that things open up and things get better and the vaccine, rollout happens, quickly so people can go on with their lives. But I think what we generally believe in is that audio in general still has a tremendous growth area. And so if people are traveling again, if they're going away, if they're commuting for work, that's all going to be really, really strong for us. Again, it may mean, once again, shifts in when and how people consume. The beautiful thing about Spotify is we have all this data and it comes into us in real time. So as we see consumer behavior shift, we're able to adjust the product and the opportunity right along with it.
Paul, what do you see as your single biggest differentiating factor? Is it the growing roster of exclusive deals that you have with certain content providers, or is it still what I guess you might argue, I don't know, launched you guys, which was the algorithm and how you could stream stuff for free and always get a great recommendation that the user wanted to hear next?
Yeah, I think it's everything you mentioned. I think the number one thing is that we are a company that is just focused on audio, right? It's the thing that we live and breathe every day. And our focus is being the largest global streaming audio player out there. So that's number one. And I would say I would just highlight what you said. So our algorithms so we've led with that. It's what's made our music differentiated.
This is FRX, guys. This is Beachbody. This is a competitor going up against Peloton. This is the SPAC. This is a pretty good one. I mean, I wasn't a big believer of Peloton, and I was looking at Peloton when it was trading around under $20, and now it's like at 150. Completely missed that train. Guilty as charged. Now we have FRX, Forest Road Acquisition, and this is merging with Beachbody. They're pushing their own bike to compete with Peloton, which costs I believe $1,000 less than Peloton. And for the past 2 trading days, we've seen it go up from $11 to today it hit a high of, what was this, $18.20? Is that it correct? Yes, a high of $18.20, and now we're pulling back aggressively to $15. Again, another one to put in your watch list. If this goes back down to around $13 or fills its gaps or goes around this area, $14. I mean, this is good buying opportunities. I mean, this is good. I didn't have any faith in Peloton. I didn't buy Peloton. I just looked at it the whole time. I thought it was a meme stock. I didn't care for it. And look at it now. Peloton, 150, I believe. Let's take a look at it. Oh, Peloton taking a massive dip. So Peloton hit a high of like 170. Now it's at 128. And this is a stock I was looking at under $20. And now we have Beachbody. Where is Beachbody? Beachbody. Oh. Now we have Beachbody. We have another opportunity to buy into the health and fitness sector, or whatever the hell it's called. So yeah, another one to throw into your watch list. FRX.
About his time at the company, saying he is wholly unhappy with the narrative about the team during his tenure at the helm. We're going to hear his message for the critics next. And as we had to break, check out some of today's top search tickers on CNBC.com. Tesla near the top of the list. It's always up there in the top 5 after seeing a pullback today. Some losses after losses last week. This despite new research from Wedbush saying the company made around $1 billion in paper profits so far from its Bitcoin bet. 10-year note yield also up there, trading at the highest level in a year. We'll be right back.
Hi, Bitcoin. Low fees. Osprey Bitcoin Trust is the lowest cost tradable Bitcoin product. Offer from the comfort of your brokerage account or your IRA. Just remember OBTC and say goodbye to high fees.
When the future first arrives, we often don't recognize it. Interactive Brokers founder Thomas Petterfy brought the future to the floor of the American Stock Exchange in 1983. The company had fabricated Wall Street's first mobile computer, and it changed finance forever. Today, Interactive Brokers continues to push finance forward by building the latest technology you need to increase your success. Move your account to Interactive Brokers.
Tasha, did you know Geico could save you hundreds on car insurance and a whole lot more? So what are you waiting for? Hip-hop group tag team to help you plan dessert?
French vanilla, rocky road, chocolate peanut butter cookie dough. Scoop, there it is. Scoop, there it is. Scoop, there it is. Scoop, there it is. Scoop, shakalaka, 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 shaka. Scoop, shakalaka, shakalaka, shakalaka.
Geico. Switch today and see all the ways you could save.
You know what hurts? What really hurts?
The doctor's not available till next month.
What? What really, really hurts? What really, really, really hurts? But you know what's painless? Using ZocDoc to find an in-network doctor and compare reviews. And what actually feels kinda good?
Wow, that's better.
A same-day appointment.
Thanks.
What just... To instantly book an in-person or video visit, download ZocDoc.
There's only one Mark Cuban.
That's what I'm talking about.
And only one
I feel the big one. Oh, yes, so funny.
Shark Tank.
Can't keep on saying that.
Shark Tank, tonight starting at 8 Eastern. CNBC, get yours.
This is the story of 4 figures from Harlem who defined blackness for themselves and what it means to be black in America today. Harlem Won My Mind, a special Into America miniseries. Listen now wherever you get your podcasts. New episodes every Thursday in February.
36 minutes left of trading. Former GE CEO Jeff Immelt is speaking out about his time at the helm of the company and how the world perceives his track record navigating everything from the post-September 11th environment to the financial crisis. David Faber spoke with Immelt earlier, joins us now with more from that interview. Hi, David.
Hey, Sarah. Yeah, listen, when you talk track record, of course, people can't help but look at the performance of the stock price. That does not tell the whole story. We all know that. There is so much more. But that is, in fact, where a lot of people sort of stop and they say, well, it didn't really work out, did it? And in fact, you guys know this. I mean, at 30 Rock, I made this point to Mr. Immelt. I would get stopped oftentimes by longtime employees of the company who would say, what do? I had a stock that was worth $40, $50 a share that I believed would be there as a bedrock for my retirement with an important dividend. And now it's 11, it's 10, it's $8 a share. It's heartbreaking. I did ask Mr. Immelt to respond to those kinds of stories when he hears them.
I think about the company every day. I say in the book, I know some feel like I've let them down. Every day I will think about that. And again, I just want people to know that we didn't get it all right, but the team always tried our best to build a great company. And that's all I can say. I understand, and it weighs on me, and I think about it. But I also want to say that there wasn't one thing I could think of to try harder for the company and for the people.
You did buy back a lot of stock, $108 billion on buybacks from 2004 to 2017. Was that money well spent?
Again, the times we did it, we thought about it in great specificity. We talked about it as a board. We viewed it against other alternatives for the capital. And it was done with great discipline and great process, right? So it wasn't like it was done by people in a dark room. It was done with full transparency and with the notion of how do we both invest in the company, which I never shirked from, do the acquisitions that felt like could position us, and generate the right returns for investors. And that's what we did.
Yeah, a lot of money, of course, from the disposition of GE Capital assets, Sarah, did go into that buyback, and many would have hoped that it just stayed on the balance sheet to deal with unexpected and enormous losses related to long-term care policies that never did get sold.
Yeah, just one of the issues there. David, how much of this can be blamed on external factors, the macroeconomic environment, which they were highly sensitive to, some of the changes in automation and globalization, which they got caught up of, and how much really is on him?
That's the question, isn't it? There's no doubt that, and he says this many times, he was not particularly lucky. He didn't have the tailwind that he would say and did in the book that Jack Welch had for the 20-plus years that he ran the company, with the stock price almost always increasing in value and very significantly. He did face 9/11 on his second day. He did deal with a financial crisis that hobbled GE Capital and almost brought the company to bankruptcy, frankly, and globalization and so many other things. But he did also, Sarah, run the company for over 16 years. And there are those who say that the company itself was not operating nearly as well as it could have, that the purchases that he made, oftentimes at too high a price, and the sales that he made, oftentimes at too low a price, added up and helped diminish the amount of cash that the company was producing. And there are those who also will simply point to what they believe, at least, was a company that wasn't functioning as well as it could have. These are all things that I discussed with Mr. Immelt. He says he is his biggest critic, and in the book he certainly is that, but he also does take opportunities to place the blame in other areas as well.
Yeah, and the timing, I guess, of both the purchase and sale of GE Capital, kind of a great example of perhaps not nailing the timing in the best possible way. David, we're out of time. I really look forward to watching that interview in full. I believe after tomorrow morning we'll be on.
It's on. Yeah, it's on .com right now.
Already on .com. There we go. After the break, a new report says Instacart could be looking into robotic warehouses to fulfill orders, and that could be bad news for its grocery partners. We'll tell you why next. As we head to break, here's a check-in on bonds. Yields continue their surge higher. Paused a little bit this afternoon, but the 10-year up at 1.37, the 30-year 2.19. We're back in a couple minutes.
All right. So we're going back down. Yeah, just as I anticipated. We're not going to go anywhere today. we're going to stay at these levels between $58 and $62. Let's see. This is the day trade I did live, just a simple one contract. I'm up $60. I mean, I can sell it now and go get some lunch. But, you know, just because of the news and the hype, and these are March contracts, I'm just going to hold it. If tomorrow we gap up again, anywhere above $62, $65, I will sell it once again at the open, just like I sold my previous contracts today at the open. So I'm not looking to make a killing on this options. This is just something that I did as a quick trade, just based on support at the $58 mark. But yeah, just a small little trade. And let's see how we're doing here. Yeah, we're pulling back. If we take a look at the volume here, volume went up right at the $57 mark. That's when we had that nice rally up, and then we saw volume die out, and now we're going back down. Not aggressively. We're not gonna go, you know, tremendously lower or any higher. There's 30 minutes left in the market. We might see some crazy end of the day algo running up and down in either direction, but it's just at this point it's all noise. It's just nonsense. So there's not much to do. I mean, basically trading day looks like it's pretty much dead for the day. But if we do see CCIV go down aggressively to $55, you guarantee I'm gonna pick up some more options. I don't think that will happen again today, but who knows? You know, anything is possible. So yeah, we're just holding steady around the $58 mark.
So what do you love about your Always pan?
The nonstick, incredible. The built-in spatula rest, genius. I just learned to cook, and this pan makes it so easy.
This dog is my heart.
Okay, girls, there's an elephant in our bathroom. Feminine hygiene. Nobody talks about it. Summer's Eve says, give us 1 week of showers. For pH-balanced gynecologist-tested freshness, you'll never forget. Summer's Eve. Find your fresh.
Want to take your shows wherever you go? Make the smart choice with Sling TV. Just download the Sling app and stream your favorite live TV in the palm of your hand, anytime, anywhere. That's slinging on the go. It's the best of cable for the best price. Download the app today.
Free tool that saves you money by finding the best deal. Gabi users save more than $800 per year on average. Go to Gabi.com and stop overpaying for car insurance.
Down more than 2% now on the NASDAQ near session lows with less than half an hour left of trading. Instacart could soon be using robots in warehouses, which could put pressure on its grocery store partners. Deirdre Bosa with the story. Deirdre.
Well, Sarah, it could use that technology to pressure its partners, or it could also use it to help them further modernize for this new era of grocery delivery that we're living in. Now, certainly grocery chains hope that it is the latter, because for years, Instacart has been collecting mountains of valuable data on shopping habits, inventory, website traffic, and more that would make it a formidable competitor. However, Instacart has long said that it would never directly compete with its retail partners, a point that CEO Apoorva Mehta reiterated to me earlier this year. And today, in a statement, the company said their entire product model is predicated on being a chief ally to retail partners. Now, Sarah, as you know well, the margins are extremely slim in grocery. So a key question here, does Instacart even want to be directly in that space? It has been busy building up its enterprise and advertising businesses, which are a lot higher margin. That may be enough for the company, at least for now, as it looks towards an IPO. Back to you.
So you're getting at my question in all of this, which is, are we saying that Instacart is exploring in these robotic warehouses actually going direct to the consumer packaged goods companies and buying their own groceries and just becoming like an Amazon, or that the grocery stores would help stock their warehouses and therefore it wouldn't be any lost business, or we just don't know?
That's a key question, and the short answer is we don't know, but you have to wonder if grocery stores, as they currently stand, are equipped to have robots operate in their stores, that they have the space for it, perhaps an extra room or warehouse where they could implement these robots. That feels fairly unlikely. You probably know better than I do, Sarah, on that front. But Instacart's technology, right, is a lot more advanced. They're helping modernize the brick and mortar grocery space. So The fear, I think, for the partners is that they go and do it on their own, as you say, kind of like Amazon has been doing it.
Dee, thanks so much for that. Time now for a CNBC News update with Rahel Solomon. Hey, Rahel.
Hi, Will. Hello, everyone. And here's what's happening at this hour. Let's start in New Jersey, where Governor Phil Murphy has signed legislation allowing a legal marketplace for recreational marijuana. The bill also lowers penalties for underage possession of drugs and alcohol that have been mostly used against people of color. Former President Trump is slamming the Supreme Court for allowing what he calls a, quote, fishing expedition into his tax returns by allowing a grand jury to view the documents. He says that attempts by Democrats to prosecute him are akin to fascism. Trump also repeated his baseless claim that he, in fact, won the election. In Texas, long lines of cars waiting for free food and water as residents continue to grapple with the effects of the deadly winter storm. One food pantry had more than 4,000 people sign up for today's giveaway. And off the coast of Texas, thousands of turtles are getting put back in the water. They were rescued last week after the rapid freeze left them, quote, cold stunned, essentially, guys, unable to move or even breathe. To find out more about the remarkable efforts to collect and warm up the turtles, tune into the news with Shepard Smith. That, of course, airs tonight at 7 p.m. Eastern. Sarah, I'll send it back to you.
Rahel, thank you. We've got 26 minutes left to go before the bell. Here's where we stand. An odd picture shaping up here on Wall Street. The Dow's up 100 points. The Nasdaq is falling 2%. You're seeing groups like energy and financials higher, while big tech gets hit hard, down 2.25% now on the Nasdaq. The Russell 2000 index of small caps caught in between, down 0.6%. So is the S&P 500. Transports are also an exception, higher today. Up next, Citi's top U.S. equity strategist Tobias Lefkovich outlines 3 sectors positioned for big gains. Plus, bye-bye Bitcoin, the cryptocurrency under pressure after hitting a record over the weekend. We'll discuss what's most.
All right, markets are rolling over. We're looking at potentially these prices are not holding in the last power hour. So this is S&P 500 futures, SPX. We're looking at a downturn. We're seeing my simple 10-day moving average holding here. But markets look very weak. I can see potentially this going back down to about 38.40 here. So there's going to be more dips to buy within the next coming days. Let's see here. Let's take a look at the NASDAQ. Oh, NASDAQ already broke that trend. We might see in some aggressive sell-off. I mean, if we go below this point here, 1314 more or less, we're going to see markets roll over hard. Let me see here. Let's take a look at this. We have a low of 312. So we're talking about 312 here. Let's try this mark here. I mean, this could be something here alarming in the market. We can see this potentially market rolling over 312. And then after that, I mean, we're in the Wild West. I mean, anything can happen. So let's take a look at the VIX. This is the volatility index. It gapped up at the open. It's pulling back. And we're kind of getting like a doji candle, fat doji candle here. This is setting up to go up. This potentially can bring some red flags. We might see some downturn to the market in the next few days. Let's see here, SPX. Most of the time, like I mentioned earlier, 8-9 times out of 10, these are buying the dip opportunities. We're going to see a lot of stocks get really cheap in the next few days. Now, don't go all in. I mean, look at this market. You don't want to go get caught at these levels. You don't want to go all in. But always have, I have some buying power available. Manage your money. Buy instruments like the VIX to hedge your portfolio. I also like VXX. This is short-term futures volatility index. This is basically a hedge. You're going to lose your money guaranteed if the markets don't roll over, but it's a great way to recoup your portfolio on a market downturn, on a black swan event. So I buy some of these from time to time. I do have some of these right now to hedge my portfolio. But definitely want to be aware of market downturns. We're seeing some volatility out there, and we're seeing now CCIV. Oh, CCIV is going down, guys. We're going down. Potential target for CCIV, now we're looking at $56 and $55. So, yeah, anything is possible at this moment. We're going a little lower. If we hold the $57 level, which doesn't look like it's very likely, this would be a good sign. But I don't think we hold 57. It's too strong. I don't really see a good wave of volume coming in. We'll see after this candle goes. There we go. We just broke 57. Okay, we're going down to 56.80. Exactly. It's too strong. Now we're going to see some buyers come in. We're seeing buyers coming in. We're going to see maybe some holding points at $56. We'll see. We'll see where we go. Okay, we're going to see some. It looks like we're going to see aggressive selling. Maybe we go down to 50 by the close. Let's see here. Let's take a, if it goes aggressive, I won't buy at 55. If it lingers to 55, I'll buy at 55. But I'm definitely not going to, when it goes aggressive, you need to wait for it to cool off because you don't know when it ends. And I'm not about to catch a knife. Okay, let's see how my option's doing. Okay, I'm down $50. Okay. All right. Let's see here. We're seeing buyers coming in now. We're seeing a little bit of exhaustion on the sellers. So it's looking pretty good. We're going to see possibly holding these levels. I don't think we go below 55 today. Okay, we saw a lot of volume coming in here. Red candle, big red candle. That's when we saw the sell-off. Okay, we're trying to stabilize at these prices. We're trying to go back up. All right. Let's see here. We see very low volume between 56 and 59 price levels. Very weak hands here. No big orders, just very light. And then we see big orders at both ends of the bid and the ask. So right now we're in a very weird place between $56 and $59 a share. Let's take a look here at the order book. Very light, very weak. Just very bland, no action. Let's take a look at my day trade from earlier today. My one contract that I bought. Okay, minus $30. All right. Well, let's stay close here and see how we close. But definitely, I don't see this being a glorious ending in either direction. Just bland.
See, vaccines and herd immunity, those kind of things evolve, then it's going to be the areas that were left behind. So they've started to come back. I'm not suggesting that we haven't seen some of the industrial cyclicals, energy, metals, even financials tied to higher bond yields come back, but there's probably still a little bit more in there for those kinds of names.
To what extent, Tobias, do you think the dollar will continue to weaken? I mean, it paused for a bit and now it's continued that slide. And then how important is the direction of the dollar for the type of sectors you want exposure to in the U.S. for the rest of this year?
So it certainly helps, Wolf. If the dollar weakens, typically benefits commodities and some of the industrial names that go, sell equipment into those commodity industries. But there's also kind of an interesting back and forth in the market right now. I think it was a very consensus view. Citi has the view as well the dollar would weaken further. But as bond yields start to creep up, is that going to hold up the dollar? Is this going to attract more money to the U.S. as they fund their deficits from foreigners who, in many respects, are getting negative yields in their own markets? So this dollar issue might not be as clear-cut as it was probably a month or two ago. And we're starting to hear from investors that kind of commentary that maybe the dollar doesn't weaken as much as perceived.
Tobias, great to see you. Thanks for joining us.
Great to be here. Take care, guys.
Straight ahead, coal's targeted by activist investors and travel stocks see a rebound. We'll break down those trades and many more in the Market Zone next. As a reminder, you can always watch or listen to us live on the go on the CNBC app. Closing bell, back in a couple.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
You know what's making Sarah's migraine worse?
Okay, let's table that.
But you know what gives her some relief? Using ZocDoc to book a video visit.
You'll get the prescription this afternoon. Does that work?
Yes!
Oh.
ZocDoc makes healthcare easy.
Get an edge. Invest like a pro. Access CNBC's live streams around the globe. Unparalleled access to CNBC experts. Actionable investor insight and ideas. Start your free trial today at cnbc.com/pro.
Looking to refinance your mortgage? The first thing you want to do, find out how much your home is worth.
Just go to ownerly.com, enter the address, and see the home value come to Ownerly.
All right, guys, I'm going to summarize what happened today. I'm going to make a video after this, so I'll leave it on. I'll leave the live stream on until 1 o'clock until the markets close, but this is basically my summary for the day. We saw this article from Markets Insider be released talking about how CCIV spiked up 19% as the reporters tell investors that to expect Lucid Motors deal as soon as Tuesday. So nothing new. This is basically recapping everything that I've already covered over the weekend and Bloomberg covered, talking about the merger, the valuation, and yeah, everything else we covered. We also had a new Bloomberg terminal update. Let's take a look at that. New update. CCIV is being listed in the Bolsa Mexico de Valores. This is CCIV will be listed on the BMV Mexican Exchange. So now we're in the obviously New York Stock Exchange. We're in the Berlin Exchange, and now we're in the Mexican Exchange. So more bullish news. So new article, going out there, Bloomberg terminal updates, and that's basically any new relevant news. That's pretty much where we stand. I appreciate you guys coming out for my first live stream. This is the first time I try to set up my live stream. I know there was massive lag earlier today. I fixed the problem. If you guys enjoy this stream, this is the way that I see. It takes me a while to edit the videos, and sometimes when I release information, it might be a little late, and I want to give the most up-to-date news as soon as possible to make the best possible decisions in investing and making money. So I see this live stream being very valuable and very helpful. You can just put it on your background and just hear market news and see the depth of the market and see what we're doing out here as a group. I like everybody's idea and input, and also throwing me some tickers out there, just bringing some awareness to all retail traders, and I really enjoy your community. I could only see so much, and it's really difficult for one person to be looking across all markets, all tickers, all SPACs. So I'm just trying my best out here to bring you the most valuable content that makes you money. So I appreciate it. If you're not subscribed, if you can subscribe to my channel, I'm trying to get to 10,000. That's my new goal. And I'm going to summarize basically, if you're in the live stream, you guys, have all the perks of getting the news first. And the video that I'll be releasing later today is basically everything we already watched live. So I'll be summarizing what I just talked about today and how CCIV was trading and what to expect for tomorrow. And yeah, so definitely you guys are in the loop. I will, by demand, I asked if you guys wanted me to do this for tomorrow, because tomorrow is a big day. So maybe if this live stream thing works out for me and it looks promising, and you guys join me, subscribe and like the video, then I'll definitely be doing this a little bit more often. Tomorrow is a big day. It could be it could be it's gonna be, it's not, it could be, I know tomorrow is going to be a very volatile day, so it's going to be very hard to navigate tomorrow if you're trading it. And I'm just going to try to bring as much as information to make the best possible decisions. So yeah, I appreciate you guys for sticking around. I'll leave the live stream on until the market close, and I will be on tomorrow 15 minutes before the market open to see where, maybe by then we already have a merger. Maybe CCIV's at, $70, $80. I don't know. So I'll definitely bring some commentary and bring the most, up-to-date news live. I appreciate it, guys, and thank you.
Of rising interest rates and of inflation to come in the months ahead. So I think when you really look at the action that you've seen over the last 6, maybe even 8 months, is yes, you do see high growth tech names get hit when interest rates rise or the reopening trade story becomes more favorable. But on days like today, you do see that cyclical, value-oriented sectors can pick up the market. And over the over a period of several months, you've seen the S&P 500 kind of trade sideways. So overall, the rotation between different sectors has really worked out for investors. And if you're a stock picker on the right side of the trade, you could also do well.
Let's hit shares of Kohl's. They are rallying today after a group of activist investors is taking on that retailer. Leslie Picker with the details. Leslie.
Hey, Sarah, that's right. A decent pop today for what that group of activists calls a chronically underperforming stock price. Now, the group is composed of McCallum, Ancora, Legion, and 4010, which own shares and options representing about 9.5% of Kohl's. They're looking to shake up the board, revealing 9 nominees today. They're also urging Kohl's to streamline inventory, brands, marketing, promotion, sourcing, and urging the company to sell non-core real estate. Kohl's said in a statement in response to all of this that it rejects the, quote, investor group's attempt to seize control of the board and disrupt its momentum. Guys.
So, Leslie, as someone who's talked to Michelle Gass before of Kohl's, this is not a Bed Bath & Beyond situation, which these activists did have some success in, and they've got a track record when it comes to helping that retailer. That was a struggling case. Kohl's has had some interesting ideas that has earned it a number of upgrades, which the company itself points to, including the Sephora within the stores, the partnership with Amazon, the fact that it's not in malls, and a lot of analysts say it is primed to capture a lot of market shares in malls. So how tough of an activist battle is this going to be to take on, given the fact that she has generally been liked by the Wall Street community, from what I've read?
You bring up a great point that 3 of these activists took on Bed Bath & Beyond back in 2019. Vastly different companies, similar playbook, especially with regard to kind of the promotion activity, marketing, inventory, getting all of that back in shape. Also improving the board. The activists point out that there isn't anyone on the board with a retail CEO. They kind of went after that same line back with Bed Bath & Beyond. But to your point, this is not necessarily a struggling retailer if you look at its stock price. This is a company that has doubled, and part of that has been just a benefit from overall pandemic-related plays, the retail sector as a whole. Scott Wapner actually asked the head of McCallum this earlier today on Halftime, like, why would you go after this company if it's performed so well? And he explained it as more of a relative value play, that it's done well, especially recently, but prior to that, it has struggled, it has lagged. And then the fact that they're kind of looking in this post-pandemic world and how it relates to other retailers in the same space and performance. And he says it's been lagging them.
Leslie, thanks so much for that. Travel stocks, meanwhile, taking off today. Seema Modi's got the details of that sector for us. Seema.
Wilfred, vaccine is already translating into future bookings. That's what Royal Caribbean CEO Richard Fain told me earlier today. The cruise line is seeing increasing demand from customers 65 and older as it aims to get back to sea in May. Royal, Carnival, Norwegian, all up nearly 10% or more right now. Now, as part of this reopening trade, the airlines are getting a lift led by Delta Air, up 4.6%. And within hospitality, a pair of upgrades. Evercore ISI analysts labeling Marriott the best value play within lodging. And following positive commentary from Expedia about vacation rentals and data from AirDNA showing new bookings for alternative accommodations in January surged to the highest level on record. A Loop Capital says when Airbnb reports earnings this Thursday, all signs point to a, quote, blowout. Now, Airbnb is sitting out in today's rally that we're seeing in travel, but guys, it is higher by 190% since going public. Sarah?
I'll pick it up there, Seema. Lindsay Bell, do you think this, thank you very much, Seema, does this sector still look cheap, or is it rallied and bounced too much off the lows?
The hotels, I think when I look at the cruise line, the hotels, and the airlines, they all are telling a little bit of a different story. They're all kind of expensive, but when I look at the airlines in particular, they are still, if you look at the Jets ETF, it's still off about 17% from its pre-pandemic levels. And, you know, while on a valuation level, they are expensive, I think there's still opportunity, though, for investors to price in an earnings rebound and a deleveraging of their balance sheets. And I do think, especially when I think about the airlines versus the cruise lines, they might be able to get back to recovery levels a little bit sooner, just because the restrictions are a little bit less complicated for people to travel, at least domestically, via airplane rather than cruise lines. So, you know, I kind of lean that way, I would say. But there's definitely opportunity still among all these reopening plays out there.
As you look at the valuations, Mike, for airline stocks, how do you factor in something like business travel, which is not set to rebound as quickly or potentially as completely as leisure travel?
Yeah, it seems like it's going to be a longer road back for that reason. And you really, I really would caution people that don't just look at the stock prices or the charts, because you have to say how many more shares were issued during this period to raise capital, how much more debt is on the balance sheet. And I think, honestly, a lot of this sector is already pricing in a massive snapback and a boom. Now, nothing says you have to only go back to the pre-COVID share price levels, because that was some kind of a ceiling. The overall market's up 15% since then, so I guess there's some room in there. But I think a lot of these things are already kind of front-loaded a lot of the recovery story.
We've got to talk Bitcoin, pulling back today from a record high. Kate Rooney here to explain why. Kate.
Hey, Sarah, we've got a few things weighing on Bitcoin today. We had Janet Yellen sounding the alarm about crypto earlier. Elon Musk saying over the weekend the prices seem high after Bitcoin hit 57,000. And some new data showing that weakening demand from those larger investors who have really been cited as a big reason for Bitcoin's recent rally. According to blockchain firm Chainalysis, investors holding $50 million or more worth of Bitcoin reduced their holdings significantly during the week of February 8th. That was right when Bitcoin first topped 50,000. That was also the biggest reduction by that group since late last year, but it's been balanced by an uptick in new retail investor demand on exchanges. Guys, back to you.
Kate Rooney. Kate, thank you very much. Lindsay, how closely are you watching Bitcoin these days?
I mean, it's hard to avoid Bitcoin for sure. But, you know, I think it's a volatile asset class. All you have to do is look at the chart of it, right? So I think it's come a long way from being really a ways and means for illicit transactions to where we're at today, where it's being used much more as a form of payment and being accepted by several different retailers. And there's being infrastructure built in the financial system to accept that. But that doesn't mean that it's not being used for illicit transactions anymore. So I think what the action that you're seeing today.
All right, guys, I had to come back. We see a wave of buyers coming in. This is good news. I think we're going to have a nice gap up tomorrow. We're seeing sellers being exhausted, and we're seeing a wave of buyers coming in. I don't know if we're going to run up today, but I'm starting to like this ending here. Definitely, buyers are heavily coming in. They're trying to kill these bears. Get these bears. But yeah, we're looking pretty good. The bulls are looking nice right now. I'm liking this ending. I'm glad I bought the option. Actually, right now is not a bad time to buy an option. Yeah, my option's still holding. Minus $20. Not a big deal. Okay, my March option. Pretty reasonable. And yeah, this is, I'm liking this ending. We're ending strong on a good note. And yeah, let's see how many more minutes we have left. 2 minutes. Looking good. Looking good for the end.
Feeding mechanism with dealers buying the stock. It actually kind of turned in reverse. There was just a big overhang of a lot of those options that are now out of the money. And so I think there's a bit of an unwind there. There's also a little bit less of a uniqueness factor in the investor's mind about playing EVs, because now it's happy to play these SPACs that might merge with another EV or even GM and Ford. So I think a lot of that stuff is feeding on itself. And it's also the same people that own Bitcoin own Tesla. It's not so much that it's affecting Tesla's balance sheet.
We have just under 2 minutes left. Mike, what are the internals telling you?
Pretty mixed, actually, as we've been talking about. A lot of winners against a lot of losers. So if you look at the New York Stock Exchange, slightly more decliners than advancers, but that's been close to 50-50 all day. We talked about the kind of stay-at-home versus the going-out portfolios. Very stark differential today. If you look at the ETF that tracks the leisure and entertainment sector, it's up 3.3%. The work-from-home ETF, a lot of those COVID winners down almost exactly the same amount. That's a massive spread on a one-day basis. And then the volatility index certainly has lifted a little bit here, as you might expect with the market down, but roughly staying in its range. It was already above 20, and so here it is still at 23, not really breaking higher in a dramatic way, Sarah, because when you have that give and take, winners and losers, it actually suppresses index-level volatility, Sarah.
Let's take a look. Mixed picture for stocks. Boy, that is an understatement today, with the Dow higher by 31 points, certainly off the session highs. It's kind of fallen into the close as the Nasdaq's declines have deepened. Dow's only up 38 points. Caterpillar is having the most positive impact on the Dow. S&P 500 down for a fifth day in a row. We actually have not seen a losing streak that long since last February, February 28th, 2020. Remember what was happening then? We were going into this pandemic, COVID-19. The Nasdaq is the story today. It is falling hard, down more than 2%. Worst daily performance for the Nasdaq since January, where it had another big down day, down 2.6%. Real valuation scare for some of these big cap tech names like Apple, like Tesla, all falling hard today. The Russell 2000 index of small caps also down about 0.7%. But transports are higher, commodity prices are higher, and bond yields are higher. Potentially why you're seeing groups like energy and financials up. Wilfred.
Welcome to the Closing Bell, everyone. I'm Wilfred Frost, along with Sarah Eisen and Mike Santoli, CNBC senior markets commentator. As Sarah just said, we did slip into the close, the Dow ending up only 29 points. It had been up 160 about an hour or two before. Had, of course, been down 208 at the open, as you can see from the intraday chart. But a soft final hour and a half of trade for the Dow. S&P down 0.8%. The Nasdaq Composite down 2.5%. That plays out as you might expect in the sector performance. Energy, financials top, technology at the bottom, and the likes of Tesla and Apple continue their recent slide. Tesla down 8.5% at the close. Apple down 3%. The SPAC mania heating up again today. Starboard Value Acquisition Corp merging with data center company Cyxtera in a $3.4 billion transaction. Starboard's Jeff Smith and Cyxtera Executive Chairman Manny Medina will join us exclusively to discuss that deal coming up. Lindsay Bell from Ally Invest still with us, and Omar Aguilar from Charles Schwab Investment Management joins the conversation as well. Good afternoon to you, Omar. Mike, I'll come to you first of all with today's action. Clearly, we've talked about the rotation and based often on the cyclicals versus the high multiple tech stocks. Also seeing that play out in the commodity space as well. Oil continues its rip higher and the dollar soft today. All certain factors that you could understand together, but the question is how long can it continue and the headline indices hold up? Yeah, and there was enough urgency behind the action today, Wolf, in those areas, as well as looking at just the amount of kind of liquidation in the big growth stocks, where you have to ask if these relationships are getting just a little bit too high tension. And they're also, you know, the other things we should keep in mind, we've been talking about for a while, the market maybe used up a fair bit of energy just to kind of stay still and churn last week, even though it was very impressive how, you know, the dip was bought each day. And then we are in a weak seasonal period. So we have all these factors that you can kind of put in the middle of the table and say, would it really surprise anybody if we had a little bit of a pause or a pullback? And the answer is no, but that's been the case for a very long period of time. I've been talking about 400 SPACs issued in the last 13 months for a while right now. Is it all of a sudden going to matter, or is it just going to be another one-day blip? And I think that's the question you have to take, because nobody's really questioning the underlying economic trajectory here. And I think that's the good news, that it seems as if all this is market kind of maneuverings around a good recovery story. Omar, are you reconsidering your sector allocation for the year ahead in light of the recent spike in yields?
Well, you know, it's very clear that the rotation that started back in November